Me? Is that a question for me or someone else?
Yeah, you, Romeo.
No. Nope. And but the charter members have a distinct code. So you wouldn't be asking me that. You wouldn't be asking me that question if you were familiar with the code they have. Which, in my opinion, let me talk about this. Which, in my opinion, is like kind of like a. I don't agree with the idea of having a code. It's like having a collar or something, right? Where you have to wear it by force. That's a very. That's a dog move by Michael. So, is my voice clear, folks? Is my voice clear?
Yeah. Yes, it is, mate.
And is someone recording? Is someone recording?
Yes.
All right. Because we start now. We start now. So, welcome to the inside. Welcome to the second best decision you made in your life. First one, of course, me following me. So good job and welcome. Today we're gonna have two main sessions. Possibly extend them to some more if we feel like we have fuel in the tank, right? So have you seen? I've given the disclaimers in the comment section, and the syllabus more or less as well. One, two, three, and four. So one, which is right now, foundation of how to think. So nothing price related, really. Simply nothing price related. Just how to view the markets the way I view the markets. Because to read price like I read price, you must view the markets the way I view the markets. Second of all, smart versus dumb money, which is an old concept. It is not solely ICTs, right? That's a mistake which a lot of people make. A lot of people who are introduced to ICT only, and they don't know any other way of the markets, right? That's what they think. They think he created the concept of smart money. But no, the concept existed for a long time. It existed ever since candlesticks existed, right? The idea of someone preying on someone else, a predator and a prey. So if you look back in history, and it's a very basic premise and concept which existed before, nothing new. But we're going to look at it from the lens of highs and lows, right? That's my main focus. Number three is market profiles, trends, and market profile ranges. So trending markets versus ranging markets. Now, if you have any interesting question, focus. If you have any interesting question, then you are allowed to interrupt. right? So before you ask the question, ask yourself, is this an interesting question or is it a silly question? So the only interruptions that are allowed are interesting questions which may be found in common with others and may give a collective answer. Trending markets and ranging markets. And finally, number 4, which is the entry techniques. This is the meat of it all, right? Which is why I left it to the last. Kind of a dick move by me, but I think that's the correct way. For 2 reasons: to keep you hooked, and because before you understand the entry, you must understand the logic of how price moves, what the markets are. And so the final thing that matters is this: after you understand everything, entry technique plus a trade review or 2, an in-depth trade review. Horrible handwriting, but whatever. So before we get into the lessons, which we might finish today, by the way, if we have enough fuel in the tank, we're going to do these 2 for sure, right? So we have 2 hours, at least 1.5 hour, 2 hours for sure, because each class, it varies from 45 minutes to 1.5 hour. So we're going to have 1.5 hour to 2 hours at least for these 2. All right. And same here. Before we start with the classes, I have to give a few disclaimers. Disclaimers. And before the disclaimers, does anybody have any question about this? Does anybody have an interesting question about these 4? Let's go. We want to have an active learning session, right? Instead of me just talking, then you're going to sleep and watching later. You can do that. But an active session would be more beneficial. So, any questions about the 4 topics we are going to go through? Speak up. There's 20 speaker tags. There's 20 speaker tags. Don't be shy. Don't be afraid. You can speak.
Romeo, ignore if this is a stupid question, but which of these 4 did you personally have the hardest time grasping it?
Probably the foundation, and you'll see why. Any other questions before I start about these 4 and their layout, their structure? Again, collective questions, which you may think is a good question for the people. Where's Zoe? There's someone who has to give the speaker tag. I don't see you, buddy. All right. No questions. If you feel like you want to speak, then simply say "excuse me," and I'll stop, and you can ask. All right. So remove, and now we start with the disclaimers. Goes the protocol. So, first of all, I'm not your financial advisor. The classic, typical disclaimer, right? For legal purposes. I'm not your financial advisor. I'm not going to teach you how to make money, right? That's not why you came. You came because you saw my price reading skills. So I won't show you how to make profits. That's something up to you, because as we know, analysis versus execution are two whole different worlds. And those who trade live know that, right? Unlike most of Twitter, especially ICT Twitter, if you trade live, then analysis and execution are two different things. So I will be touching on both. But the reason you came is to learn how to read price, or at least see price the way I see it, because most of you are proficient or semi-proficient already. So you know how to read price, but you are interested in my perspective, and that is what you're going to get. You're going to get my perspective on price, not how to make money. I will touch on execution as well at the end, towards the end in number 4. All right. That's disclaimer number 1. Disclaimer number 2 is you will get as much as you work for. Right? What does that mean? That means I can give you the Holy Grail, which is not here. If you came for the Holy Grail, then no, it's not here. But I could give it to you. But if you don't go and try it out for yourself, if you don't test the theory live, if you don't trade it yourself, then you will never be able to trust it, and you will never be able to use it or utilize it to its maximum potential, right? So you will get as much as you work for, my friends. The sessions and the recordings will be with you. The sessions and the recordings will be with you. The same exact way that the core content is over there, right? The same exact way that all sorts of YouTube videos are there. But if you don't use them, then what's the point, right? That's number 2. Number 3 is learning and trusting a model, in my case, Turtle Soup, is done off social media. Right? You come on social media when you have a model. And even then, it's preferred to stay off. It's a distraction. But especially for learning, for people who are trying to find a model, the worst thing you can do is be on social media, right? That's going to set you back massively. So learning the process, which is first of all, back testing to see what it looks like in the past, because we will be teaching a little bit of hindsight, not that much, but we must admit that the history of the charts is a gold mine, and history repeats itself, right? Which means that, which takes me back to my main point, which is learning is done off social media. Why am I mentioning this one? Because I get a lot of DMs, a lot of messages. They say, hey, what do you think about this turtle soup? Or this one, look at this high, this random high turtle soup, right? Nope. Learning is not done like that. It's done offline. You sit down, you observe price, you tape read, you predict price, and you journal the observations. I thought there was a turtle soup and this high, this random high selected for no reason. I chose it and it just ran through it. Fuck Romeo, he's a fucking scammer. Fuck him. No. Observe, why did it happen? We were in a ranging market. It became into a trending market, right? Why? Because there was a higher time frame PD rate down here, for example, right? So learning is not done like this. You don't send me a message and say, look, you can ask my thoughts about a mistake you made. That, yes, you can say, you know what? I made a mistake over here. Can you please correct me? Sure. I correct all the time. I've been giving out free information, free corrections, and I will. It's not going to stop on Twitter. But that's what you should be doing, is asking for corrections of mistakes which you anticipated. Right? Not trying out stuff in public. I've seen that from a bunch of you. And you know yourselves, which is trying out new stuff in public. That is the worst thing you can do. The worst thing you can do to your growth. Why? Because, first of all, if you're good, or if you have potential, and you get it right once or twice, right? For example, you catch a Super 2, then people will start paying attention to you. And when they pay attention to you, when a rookie pays attention to a rookie, then rookie number one, which is the even rookier rookie, is going to look at rookie number two, right? So we have a small rookie and a big rookie. The big rookie is testing his model on social media, which he shouldn't be doing. Now this guy just now came into the markets. Now this is what happens on Twitter, right? This phenomenon is what happens on Twitter. Is rookies being impressed by rookies who are less rookier than them, right? Right? So the small rookie looks at the big rookie and says, wow, he got it right once or twice. And then the bigger rookie, not the bigger rookie, the more advanced student who is still a rookie is going to try, and he's going to swerve away from learning and focus more on impressing this guy, right? And then the growth curve just falls down. Right? So if you had any potential in learning, it just went down the drain, because you're trying to impress this rookie instead of learning. Because the best way to learn is to tape read. Watch the candles live, predict them, and notice what they do, right? Watch them, predict them, and notice what they do. If they follow the plan, or if they play out according to your anticipation, write it down. And vice versa. If they fail, which is even more interesting than winning, right? Because a loss is an opportunity. A win is not. So if they fail, you get to learn how to never do them again, right? But this all happens off social media. on social media, it's going to be you trying to impress him, and then you get some more rookies, right? Some more neophytes coming in, all watching you, and then your head gets big, right? You act like you don't like the markets, and you're still a beginner yourself, and you start shilling prop firm links, right? Or whatever, exchange links, Prime XBT, Bybit, right? Whatever. So this is cool if you want some attention. This phenomenon, if you want some attention, then cool. But if you want to really learn how price moves, then the best way to do it is off social media, in your charts, by yourself, with your journal. So that's number 3. And number 4 is the classes. As I mentioned, they're going to be from 45 minutes to 1.5 hours each. So in total, it should be, it could be less. It could be 3 hours, although we already surpassed that. But it could be 3 hours. It could be 5 hours. It could be 6 hours. It could be more. So it all depends on how much we cover in the time frame I have given. All right. So that's a mess. That's disclaimer number 3. And disclaimer number 5 is a more personal one. I know that a bunch of you have got in without paying, right? Whether you forged the document. Yes, you know yourself. So you got in without paying. Not that many, but there's a bunch, because I see the numbers. I'm not a dumb person, so don't think you fooled me, right? I see your fake receipts. I see the fake transaction hash you made. I see the fake. I see the processing, not the completed, right? I see all of that. So I know you slid in, but the fact that you even photoshopped shows that you want to learn. So you can stay for now. Maybe you'll be kicked off any second. Who knows? But I see you, right? And there's a bunch of people who have snuck in who don't deserve to be here, right? And for those people, sit down, take notes, be respectful, learn, and you're good. There shall be no tolerance for disrespect over here. The mics are open. You can talk. I answer every single question. There's no reason for me not to answer a question. Why? Because simply I have an answer to every question. Right? That's not the issue. But if there's any disrespect shown in the least, right? Misunderstandings are fine. Misunderstandings are fine. But if you show any disrespect, then you shall be kicked out instantly, with no warning.
N-am ce face, că eu sunt responsabil cu înregistratul și cu editatul după aia.
So there is a respect, which is a basic, bare minimum, which we should all be doing. Now that tone I'm giving, that harsh tone, is only for a specific, certain people who know themselves, and they know why they're here, and they know what they're doing, right? So when I speak in a harsh tone, it's for them. For the majority of us, most of us, we're here to learn and have a not fun, because learning is not fun. It can be, but most of us are here to learn and get something useful out of this. You invested your money. That tells me you're serious. And your time. And I'm giving you my time. So I'm serious about giving you the information. So I respect that. I respect and I appreciate someone who appreciates knowledge. All right? And finally, 1 second. Yeah, that's it. 5. No 6. Any questions before we start? Let's go to Telegram. Let's go over here. Any questions, folks?
Can you talk more about?
I can't hear you.
Can you talk more about number 4? I didn't get very well about number 4.
Number 4 is how to learn, my friend. How to learn price, right? If I'm not mistaken, I think it was it was the time. Number 4 was time, my friend. It was the duration of each session, each individual session can range from 45 minutes to 1.5 hour, 45 to 90, right? So just something to keep in mind, nothing important, right? For those asking for the mic in my DMs, let me try and give you a mic. But before that, let me start with this. Let me let me classify the audience. So, is my voice clear, by the way?
Yes.
All right.
Yes, mate, your voice and the video is clear.
Excellent. As that should be. So, right now, you, my friends, are divided into 2 people. You 1,200 people over here, you're divided into rich and poor. All right. Now, and the rich are divided into 2 people, 2 categories. Some people who are here for fun because of the turtle soup fad that's been going on Twitter, led by me, right? So you don't really care about price. You're just here to have to be entertained, right? You will not learn. You will fail, right? You know yourself. And of course, the second category is the rich, but still curious and hungry about price, right? Because as we know, the best learning is done in need. When you really, why does that happen? Because of the inspiration and motivation and dedication to learn. Because you have no option. When you have money, right? When you have enough money in your bank, then you don't really feel motivated to learn a money-making skill, which is trading, right? So that's something to keep in mind. Is if you are in this position, then the only reason you will trade or even consider looking at charts is because you really like them, right? So rich number 2, rich 2.0 is hungry. They will learn. The poor people, same. You have poor people within you. Who are passing by as a fad, but they can't afford the fad. So why do they pay? They paid for some holy grail or whatever, right? They paid for some key to unlock the markets. That is the equivalent to the rich who's paying to be entertained, not to learn, right? Because your sole goal from social media or if you pay someone to teach you whatever, your only goal should be, there's a Bells classic, your only goal should be to to extract some useful information from the person. That's your only goal. You don't care about their personality. You don't care about what they say, how they look like, what they do, whatever. Right? You can be talking to some fucking Shrek lookalike, and there's a bunch on social media. But you don't care. The only thing you care about is, does he have some information which may be useful to me? Does this person I'm following, does this random person who's popping on my timeline, does this person know something I don't? Or does he know something I know which he can improve on? Can he improve? Can he give me something new? Right? If the answer is yes to any of those, that's all you care about. You don't care about anything else. That is how you learn. Not by engaging in social media. That's a waste of time and effort. So, the poor, rich people coming to enjoy themselves, no learn. Rich people who are really hungry and curious will learn. Poor people, they're coming for a holy grail and a thing to save them from poverty. Trading is the worst idea if you're broke, right? Because when you trade broke, when you trade with your last few dollars, then then you trade like shit because just the pressure. No matter how iron-minded you think you are, right? No matter how strong-minded you think you are, trading with the last buck you have is a horrible idea because there's an inherent risk in the markets. Your existence, risk of the broker, risk of the markets themselves, risk of what can happen, risk of the news, risk of for the short-term fluctuations. There's always a risk in the market. So risking your last buck is a stupid, silly decision. Same with risking lended money or borrowed money. You can't do that. That's also another situation where you're putting unnecessary pressure on the outcome. When you put pressure on the outcome, you trade like shit. All right? So the poor people, they came either for the Holy Grail and the key to the markets, and these will fail. Why? Because they are temporarily motivated. And as we know, we don't want to be motivated. We want to be disciplined, because motivation is temporary and discipline is permanent. It is built inside of you, right? So we don't want motivation. We want discipline and dedication, right? So the poor person who is over here right now, who came for the Holy Grail, he shall fail. And there's a poor person who's hungry, who's not trading his last buck. He's being smart. He shall learn, assuming he puts in the work. Right, so that's a quick classification of the audience. So know where you are, know your position. What are you? Which one are you right now? Ask yourself, which category do you fall under? Because you fall under one of these four. There's no fifth. Right? So which one are you? And if you're in these two, then you better consider transferring yourself right here, or you're gonna fail. And you're gonna waste $100. Probably doesn't matter to you, right? You're gonna waste $100, and you're gonna waste your time. So have the correct mindset before you start. With that being said, I shall now take questions briefly before we start into the foundation.
Excuse me, Romeo.
Tell me.
If we are not able to be here for the whole session and we have questions that weren't asked during the recording,
at the end of all the 4 sessions, there will be a general FAQ, right? Which I'll look at, and I'll consider the most frequent, important questions and answer them. All right?
okay, so we can submit questions later.
That's another issue. By the way, thanks for bringing that up. Is questions. You don't ask silly questions. Not you, Hopi, right? I'm speaking in general. As you know, I don't speak about people. I speak about ideas. So questions in general, right, about the markets. When you're learning something new, whether it's a degree, whether it's in college, whether it's whatever, questions in general should not be silly, surface level questions, right? You should be asking in-depth, in detail questions, right? You should be asking questions which are interesting, not just for fun, interesting as in applicable when it comes to trading, right? That's regarding questions. So if you have any questions, any of you, then por favor, think twice. Is it a smart question? Is it a collective question which will make sense for the people? Or is it my own question because I'm a slow learner, right? Two different things. So Z1 trader, no. I have no idea where you are, my friend. He's saying, do you not like me? I have no problem with anyone. I have no problem with any of you. Even the haters who snuck in, you're welcome. Enjoy and take notes. I discuss ideas, not people. Right? So where are you? I don't see you in the stream, by the way. Someone's trying to speak. You're trying to speak, but I cannot accept you to speak because I can't see you. Which means if I don't find you right now in the next 30 seconds, then I'm going to have to let you wait till the end of the session, all right, to ask your questions, which was the original plan anyway. Let me just see if I can find you. Right. All right, we're leaving for the end of the session. Any questions? Anyone else? Does anybody else have a question? Before we start, there is around 20 people with a mic. If you don't speak, I'm gonna have to remove your speaker tag. Right? If you don't speak, I will have to remove your speaker tag.
No questions, bro. Happy to proceed.
All right. Remove. Mute, not remove. That's mean. Mute. Move. Mute. So we proceed now with the foundation. Now, as I've said, and that reminds me of disclaimer number 6, which is excuse me. Depending on how much fuel there is in the tank, we may finish the 4 hours today. I can do it. I have the strength and the stamina to do so. So it depends on how you guys receive it. If you guys receive it quicker, as you should, because you're all intermediate and above, right? That was the deal we had, which is you must be intermediate to advanced to make use of this. Is my voice audible? Is
Yes,
my voice
clear.
Yes.
all right? Is the screen clear as well?
Yes.
Yes,
It's clear.
Obviously, a lot of you are gonna have questions, right? In between. So if you have any question, write down your notes. Write down the question in your notes and ask it later on, right? Because most of the time, what happens is you have questions, and the questions are answered in the previous in the next few minutes, right? It happens in all settings of learning anything. So if you have a question you feel is important, then write it down on a paper and ask it to me later on. All right? So we move now into the foundations. We're done with the disclaimers. We're done with the introduction. Now the foundation. First of all, the markets. Now, what are the markets? And this is a question which needs participation. So, what are the markets, my friends? Correct answer is only.
People.
What are the markets?
People buying and selling.
All right. Any other
With the
answers?
intention of making a profit.
What are you saying?
With the intention of making a profit.
Okay. Any other
Sentiments
answers?
of people. Sentiments of people.
Say that again. Louder.
Sentiments of people.
Okay. Okay.
Where the buyers and sellers meet.
Okay.
Markets are hedges.
Transaction.
Markets are hedges that move price around to liquidate their funds.
All right. All right. So it's an exchange place. It's a place to buy and sell. It's emotions. It's exchanging funds. What else? What are the markets?
Liquidating one's asset.
All right. Liquidating one asset. I'll accept one last time.
It's a business.
Right.
Where money
Oh.
is funneled from dumb money to smart money.
That's the closest answer there is. Who are you? Who is this?
The charter member.
Who are you? One second. The
FX.
right. That's the closest answer there is. Right. The markets are a money-losing machine. Right? It's a good place to go and lose money. The financial markets, FX, crypto, equities, they're a nice place to go and lose all your money. That's not a very nice tone to start off, right? The image portrayed on social media is, trading on your laptop from the Maldives, jumping into a fancy car, right? But no, the truth is, it is a money-losing machine, right? 95% of traders lose money consistently. So 95% of all traders are losing money day in, day out. So out of every 10 people, 9 people are losing money consistently. Right? So the question is, if everyone's losing money, then why do they stay? Another question. Give me the answers. If everyone's losing money, think about it. If you're losing money, why are you staying?
Hope.
In order to
That you'll eventually start
earn
winning.
more.
For the same reason they started trading.
The same reason what?
And also the dopamine hits.
Okay, so dopamine hit, and what someone saying hope? You got hope, you got dopamine hit?
Yeah, I said hope and dopamine.
Yeah, I said hope
Like casino.
to make money.
FOMO and emotions. Basically gambling.
Yes, but you get hope from winning.
Because you win sometimes. And randomly.
Alright. Very good.
Hey,
Very good.
Romeo.
Who's that? Who said that? Who said that?
FX. I think there are some new people who
Same
want
guy,
to
huh?
speak.
Right. People who want to speak.
Yeah, there's a person named RH who DM'd me saying he or she wanted to speak. So
RH. Let's go and see. Again, this Telegram's allowing me to see only the first 100. So if you're not in the first 100, and I probably can't see you. Ah, there you are. Gotcha. Fuck. One person. Here's another person. Another person. I would like to hear speak. Here's another person. I would like to hear speak. If anyone wants, just raise your hand. Right. There you go.
And I'm sorry, what was the question again? It's for Clark here.
The question was, if everyone's losing money, why they stink?
They're losing money because the thrill, I believe.
But you're losing money. You're not winning. Why are you staying in the markets?
Because
They're losing money because they're gambling.
All right. So if you lose money, you'll lose, right?
There's a rush between each trade.
Is it greed?
You get greedy when you win. If you're losing money again and again, why?
Well, it's like the slot machine. It's like the slot machine. You win sometimes, but then you're losing
Positive
the majority of the time.
reinforcement.
Social media, man.
Well,
They see the winners.
well it goes
Right.
back to like neurological. So it has to be something with the human brain. When you place a trade, you're placing a trade to win. But in the case of not winning, you don't know. But you're still placing the trade to win. But you don't win. So you place the trade again. So you're kind of like gambling in a sense. This is where I think it comes into gambler's high, I would say.
Okay, so gambling and social media. Someone said, right? Social media, that's an important one. Which is, you go on social media, everyone's winning, so maybe I can win too, right?
They want the clout.
Yeah, that too.
It's like a survivorship bias.
Right. Yes, well, close answers. Better answers than I expected, right? The reason they stay is because the market doesn't. Nobody loses every single day, right? Or even if they do, some of you probably disagree with that, right? But nobody loses every single trade they took in their life. Yes or no? Because if you did lose every single trade if you lost every single trade in your life ever, right? Then you wouldn't be in the market. So the market gives you a win. It gives you 2 wins, right?
Damn. Yeah,
It gives you a win. It gives you 2 wins. It gives you 3 wins. It gives you a winning streak. Right? It gives you a month of winning streak, like. So, but these wins could be random, right? I'm sure almost all of you have had a winning streak in varying lengths of time. Some could be a few days, others months. But you've all had a winning streak in your life, right?
Yeah.
And if you go back to the winning streak, how did it feel? Right? Euphoric. You felt like you own the world, right? Like I cracked the markets. You go back in time and live it again in your head. Then that's what you'll feel. You'll feel something, which is when you win, right? This winning streak you're on. You feel happy. You feel excited. You feel euphoric. Right? And then, of course, as we all did, every single one of us has lost that winning streak. And in the process, blew it all in a time less than the streak itself. Right? And that, of course, for certain, when you lose a winning streak and you lose all the money you made in a time less than you made it, then that can lead to several different reactions: sadness, depression, anger, whatever, right? Now, this is the normal reaction, which is win, happy, loss equals sad. But this is a horrible way to think, right? It's the normal way, but it's a horrible way. Why? Because when you think like this, you are doomed to a losing streak. You're doomed to sadness forever. Why? Because every single trader is going to go through an 8-trade losing streak, right? Do you guys know the stat? If you're astute ICT students, then you should know this stat, right? Every single trader is going to go through an 8-trade losing streak. Now, I know this session has been so far about losing and everyone's losing, right? And the world is full of losses, but that's the reality. As opposed to, I would rather do that than scam you and lie to you and tell you that you're going to make $1 million in 1 year, right? Learning my turtle soup. 1 second, let me get a charge. You guys get a 5-minute break while I go and find the charger. You can have a chat between yourselves or whatever.
Wait, so you guys do understand the trader's high, huh? Or no?
Feels good
Yeah.
for sure.
Right, when you guys place a trade, it's almost like you want to win when there's no confidence.
Just a reminder, in these 5 minutes, this is the only time you'll be interacting with each other. So enjoy. 5 minutes.
Hey, Romeo, before you go. Hello? Oh, okay.
I mean, like, let's make the best of it.
Yeah, guys. So, but we're human beings. Nobody loves losing. If you have to be in the right state of mind, like Mark Douglas said, then you have to eliminate the feeling of being sad after losing. But we have to be plain and frank. Every person feels sad for losing.
Exactly, man. Like, every best trader has to go through that.
Yeah, and that doesn't make you less of a human or less of a trader. What actually differentiates traders is not because they don't really feel sad. It's because they don't submit to that emotion of, when you're sad or when you lose, it takes you back to all the negative emotions like revenge trading or, you start adding up those sizes. So I feel like that's more like it because if it
Exactly. No, that's what it is. Yeah.
Phone's over there.
Yeah.
And, close your mic if you don't mind. If it's being noisy. So, we were saying that every single trader is going to go through an 8-trade losing streak, no matter which enigma he has, right? Even good old ICT himself is going to go through an 8-trade losing streak, consecutive losing streak. And you never know when it's going to happen, right? So it's always on my mind when I'm taking a trade, this 8-trade losing streak. What that does is, of course, it's not, I'm not telling you to live in fear and not execute. Just be grounded. That's the purpose of the 8-trade losing streak. So,
Hey, Romeo.
that's reason number one why people remain. Excuse me, let me finish, and then you can talk. All right. Reason number one is they stay because they get some wins, and reason number two why you stay even though you're losing again and again is because you are a gambler. You have a gambling addiction. You have no life outside the markets, right? So you simply gamble your life away, pressing buttons
That's huge, I would say.
Right? It's the reasons why losers say it's the reason why 95% of traders who are losing stay in the markets, because they have no life outside the markets. They just it's all they know, right? Or they're enticed by the wins they had, which they thought may have something to do with something, right? So identify yourself, classify yourself. Don't just live randomly like a sheep. Classify what you are, where you are. Are you this? Are you this? What are you? Right? The same way I classified it in the beginning. Rich and poor. That's who you are. Divided into two of them. Right? So know your position. So
Poor as hell.
what is this? Why did this happen now? Refresh. Please come back to normal. I beg you. Yep. There you are. Nah, it didn't. All right, so this happens a lot with Trading Me, by the way, where it zooms in the wrong area, and then it gets this, the icons disappear. So if anyone can provide a solution, that'll be good. Well, there you go, fixed. So that's point number 3. So point number 1 was, what are the markets, right? Point number 2, the 8 trade losing streak, right? Point number 3, that's the foundation, of course. Foundation. Number 3 is technical edge versus risk to reward and percentage gain / loss. Now, which one do you think matters more? The mic is open now. You can talk.
I would say risk rewards.
Someone
technical analysis.
Guys, hold on a second. There's some people who's DMing me. They really want to participate in this conversation.
All right, let's go and check.
One is RH. I think you might have added the wrong person.
No, I know RH. I know him personally.
He said he didn't join yet.
But he's not here. I don't see him right now. So
yeah, I don't know. Then the second one,
exit re-enter.
Okay, well he can hear us then. Next one is B. It just said B. I don't know. I can provide the username.
Here's B. Who else?
Yeah, and then the third one is.
Who are you, by the way? Let's see. It's you.
FX21.
Okay. And?
Yeah, the third one is Angelo.
Right. You're the self-appointed.
And then this just came in. Fourth one is Alperin. They really want to participate.
I mean, it's mainly just just participation. It's nothing important right now. Okay,
well, I mean, the next one is it just keeps coming in. Ed0.
All right, folks. I'm probably gonna have to halt to the questions and keep the people right now. Right? I'll change them in the next one.
Okay.
But right now, the people who are talking are going to talk. Unless they don't, then I remove their speaker tag and I replace them with someone else. So, which screen do you see, by the way, right now? Bitcoin only? The 1, 2, 3.
D versus the RR.
1, 2, 3. 1, 2, 3.
All right.
D versus RR.
Which one matters more? And it looks like, by the way, we're going to finish the sessions today because we're already the sessions, which means more sessions. So buckle up and get your cup of coffee, right? Sit down and enjoy. It's going to be 1, 2, 3 more hours. So which one matters more?
I believe RR won't matter without the right. Yeah. I believe RR won't matter without the right technical edge.
All right. So we have one saying that this doesn't matter without this. Next.
That is
One percentage. RR would distinguish your risk and reward.
Which this is basically risk management, right? So
Right. Yeah, exactly. It would distinguish your risk management.
Do they matter
RR.
equally? Do they matter equally? Do they complete each other? Are they there to help each other? Is one more than the other? So far, we have someone saying that edge matters more.
I believe
One by one.
Being right doesn't equal profitability. Same.
One by one.
I want to say they matter equally.
All right.
Because you know you have to know what your A+ setup is in order to feel comfortable risking.
How would you know your risk on an A+ setup though?
Because through tape reading and journaling, you begin to get a feel of what an A+ setup feels like, what it is to pull the trigger and to see a trade develop that fits your narrative, that follows your thesis.
So the risk, what is the risk?
What do you mean?
Well, you need a clearly defined invalidation point, which is their stop loss.
I mean, do you not know your risk when you place a trade? I mean, like,
Even if you have a good
what
setup,
RR is.
even if you have a good setup, you may win 2 or 3 times. But if you have
Are
a
you
good
gonna
RR,
re-enter a trade if your RR fails?
if your RR is good, then the method itself will prevail, I think. If your risk management is good.
I actually think personally, according to what you wrote here, whenever you put up 2 stuffs, I put a verse. It has to be which one do you think is better?
Can you speak clearly, please? Come closer to the mic.
Yeah.
Come closer to the mic.
Yeah. So for me, I think it's RR and percentage.
Okay.
No.
So we have
Yeah.
we're not agreeing. The answer is first of all, if we want to continue, then when you hear someone talking, let him finish, and then you start talking. All right? Otherwise, I'm gonna so one by one. That's number one. Number 2.
Even if you have a solid risk management, the technical edge that matters. Really.
Okay, so if you said technical edge, you're wrong. Technical edge is irrelevant. Doesn't matter. Proof. I can prove this in 2 different ways. Number 1, a coin flip is profitable. If you read about the coin flip strategy, right? There's a whole system, a trading system based on a coin flip, right? So your edge is flipping a coin, not some smart money concepts or some liquidity purge or turtle soup or whatever. Your edge is a coin flip. That's the strategy. That's the system, right? Go read about it. If you have a coin flip as your strategy, and you have a good RR and percentage gain / loss, risk management, then you'll make money over a large enough sample size of trades, right? Conversely, if you have an 80% win rate, right? Now, which of you would like an 80% win rate? All of you, right? Everyone. But if you have an 80% win rate, which is pretty good, right? It's pretty accurate. Can we agree that an 80% win rate is good?
Yeah.
Yes.
So if every 10 trades, win 8, 4, 5, 6, 7, 8, 9, 10. You win
8 of them.
And I know someone like this, right? I'm not going to name him, but I know someone who has an 80% win rate, even more probably. He's one of the best price action readers I know, right?
Fins.
No name is mentioned, but he lacks this part, which is why his win rate means nothing to his balance, his bank account, right? Why? Because if you have this 80% strike rate, which is incredible, right? It is an incredible feat to achieve. But if you don't have this, then you'll win 8 trades. 1, 2, 3, 4, 5, 6, 7. That's not counted properly. 8. On the 9th, you'll blow your account. If you have a 90% win rate, as ICT claims to have, right?
He's up there, yeah.
Which I don't doubt, to be honest. He's one of the best, right? Price action callers in history. He wins 9 out of 10 trades. If he doesn't have this 10th trade, blown account, right? So
yeah,
this is irrelevant. You can have this at 90% and still be a loser. Or you can have this because of this. So this is dependent on this, not vice versa. Right? So you got to think correctly. Everyone's looking for Enigma and the Holy Grail and candle counting and turtle soup or whatever, right? You're not thinking correctly. Think correctly. Change your mind. Or you can have this as at a shitty, even 30%, right? If you have a good RR. But let's say 50%. Luck. Lucky guesswork. The phrase. And you have a good, solid this, then you win. So does this matter?
No.
Nope.
What does G stand for again?
And if someone asks you why, right? Because any idea I tell you, I can defend for hours, right? If I can't defend my idea I'm giving you over here for hours, I don't say it, right? So this one, if someone asks you, why does this not matter? Well, because of this and this, because of a coin flip strategy, and because of these writings over here, which is you could win 8 on the 9th you blow, you could win 9 on the 7th you blow. So it's all, everything is explainable. And in summary, technical edge is irrelevant. Turtle soup is irrelevant. Candle counting is irrelevant. DR is irrelevant. Hoppy's book is irrelevant, right? The open, hello, and close are irrelevant. All the horse shit you see on Twitter is irrelevant. All that matters is this. Without this, all your knowledge, and I'm sure there's a bunch of you, right, who are relating this to this pretty hard, right? You may have a lot of knowledge, but you have shit management, which is why you get wrecked, even though you're some advanced student of price, right?
Yeah.
So that is regarding technical edge versus risk to reward / percentage gain. Now that does sound kind of strange, like because this whole course is about price action and reading price action. And I don't like to use the word course, to be honest. It was not the intention to be a course, quote unquote. That's not my intention. It was just a gathering, a sit down, just a chat more, if you will, right?
Yes, sir.
In summary, you don't control price, even if you have Enigma, right? You don't control price. You control your risk. You don't control price. You control your...
Excuse me. Z1, could you turn off your mic if you're not speaking?
Sorry.
It's gonna go into recording. That's why. No. Yep.
Right, so adjust your risk to price. No, adjust price to your risk, not vice versa. Excuse me. Right? That's point number 3. Right, let's remove all this. If you want to take notes, then you have this in front of you. Or no? I'll give you 5 seconds and then I'll delete it. Delete. 400 drawings. Remove. So point number 3, what are the markets? Point number 2, 8, trade losing streak. Point number 3, technical edge versus risk and reward. Right? Markets, 8, trade losing streak, and edge versus reward. Number 4 is the journal, a super important aspect when it comes to learning a model, especially learning price in general, right? Because every single job in the world has a register, right? Every single job you see, as a lawyer, he doesn't memorize his client's documents, his case details. Well, except if he's a psychopath, then maybe. But generally speaking, and we speak in generalities, not in exceptions, because exceptions do not disprove the rule, right? So every profession in life has a register. A doctor as well, right? Doctor. When a patient comes to me, for example, I have to take the name, the age, his medical history, his reason for consultation, signs, symptoms, allergies, family medical history, etc. Right? For every single patient, I can't suddenly skip a patient one day because I'm feeling tired. Right? I can't say, you know what, fuck it, today I'm not gonna write his allergies because that can kill him. That can lead to his death. Right? That's an example. So I don't do it because I want to. I do it because I have to do it. All right. Even the most basic job, cashier, for example, basic meaning not to belittle them, but just a very simplistic job, cashier. Even he has to print you a receipt at the end and give it to you. So everything is registered, right? So why should trading be any different? So the purpose of the journal is 2 things. Journal meaning journaling every single mistake as you would a patient, right? As I would a patient, not you. A bunch of you. I've seen a neurosurgeon in there. I see you. So as we would a patient, we journal every single trade to see the following. And before we look at the following, the purpose is 2 things, is to eliminate mistakes. Eliminate mistakes. Horrible handwriting. Good luck reading it.
Typical doctor.
Yeah, what can I do? Comes with the territory. And correcting mistakes and eliminating shit trades. Eliminating. That is shameful. I can't do that. Eliminating bad trades. Right? Now, before you say, fuck you, Romeo, what is this? What is this? We came for turtle soup, for price, and you're giving us this is the foundation. Because to read price the way I read price is why you paid me and why you came here anyway. Right? You got to think like me. So, bad trades. Now, how does this work? Correcting mistakes is self-explanatory, right? Mistakes. You identify a mistake you're repeating again and again, and you never do it again. It's that simple. And mistakes will happen. There's no one perfect. Even ICT himself journals on paper, right? At least he used to before he retired off of the course, right? Eliminating mistakes. So journaling is essential, right? You identify the mistake you made, and you correct it. Because every every sickness has a cure, and every problem has a solution, right? So whichever mistake you make, whatever the mistake is, I held too long. What's the mistake? You didn't identify a reversal point, right? It went above a high, and you expected it to go higher, and it reversed. Turtle soup. I didn't hold too long. That's the mistake. The correction is keep in mind the higher time frame bias, because when you don't hold long, or when you catch a move and you see it rally like 20 R extra, why did that happen? Because you didn't keep. There's a very specific reason. It's not random. Every problem has a solution. So when you when you don't hold trades for long enough, it's simply because you did not keep the higher time frame bias and flow in mind, right? I didn't take partials, right? Because you didn't consider it as an area of reversal or reaction, right? Because we take partials at two places. And someone's mic is on, so
yeah, I just want to. It is vice versa when you do keep the high. When you're doing low time frame, yeah, you're seeking high time frame evaluation.
That is correct. Which is when you hold a trade, when you can't hold a trade for long, it's two reasons: the higher time frame, and you're not confident in your analysis abilities, right? Which means more tape reading. Because the more you tape read, the more confident you get. The more you believe in the system. So, not through backtesting. Side note, backtesting is cool, as we know, and I'll be showing some examples of history. History meaning not history of people, history of the charts, history of price action. Because as we know, history is a gold mine, and it repeats itself for those who have eyes to see. So, backtesting is cool, but tape reading is the skill you want to master and really focus on. So those are some examples of some mistakes which I didn't write. I'm more of a speaking guy, which means that I'm getting some messages saying someone can't hear the voice. Is my voice clear?
Super clear.
All right, bro, your
voice is clear.
All right, in that case, so my friend who is sending me a DM, you will get the recording later on, don't worry. I'm assuming someone's recording, huh? I'm relying on you guys.
I'm still recording.
All right. There's someone who promised me to record 2 people, so it should be fine.
I'm 5 minutes in.
Any questions you have which are not related to the current topic at hand, you can leave them for later because they'll be answered, right? So those are some examples of some trade mistakes and their corrections, right? I said them, I didn't write them, so I hope you noted them down. There's some common mistakes.
And these common mistakes are just errors, right?
Or just what?
Human error.
No, they're not. I mean, they are human error because, as we know, the chart is perfect, right? The chart is always in sync. Time and price are always in sync, right? Liquidity pools are always getting hit at certain times, at the exact times they're supposed to be hit, right? Turtle soups, which is the expansion, the swing points, the highs and lows, the major swing points, they always occur at the times designated for them. The only error is going to be from the operator, right? If I make a mistake, if you make a mistake, if ICT makes a mistake, if any of these charter members over here, which I see, make a mistake, whoever makes a mistake, right? It's not because of price. You see people blaming price. Oh, what is this shitty price action? No, It's you, right? You're the operator of the system. The system, if you review the manual, the system would tell you not to operate in such conditions, right? So it's human error and it's correctable. That's the point. You make a mistake, you can correct it. There is a correction for every single mistake you have.
So would you say that there's nothing like low probability conditions?
No. There's market profiles, and you have to identify the market profiles, which I've said for a long time, forever. It's the way you analyze the market, right? You profile the market and see, is it valid to be approached or not? Which is the next lesson, right?
Thank you.
Market profiles. So the market is always in one of three profiles, right? As an intro, the market price, when you open a chart, you want to profile the market like, I don't know if there are cops over here, law enforcement, but when you see a criminal or a suspect, right, and you profile them, you make sure, are they approachable? Are they a threat to the surroundings, to me, right? Can I approach them without a weapon? Do I need a weapon? Do I need backup, right? You profile the situation, the person, and then you approach based on your analysis of the profile, right? So same with the market. You go, you open the chart, that's the first thing I do, is profile the market. That's a common mistake, which people say, hey, Charles Super is a scam. I tried some random high and it just blew through. Why? Because market profiles. You open the chart. Are we trending? Or are we ranging? Right? Because it's only two market profiles. We're either in a trend or a range. Always consolidation, expansion. Consolidation, expansion. Consolidation, expansion. There's a way to trade each of them. Right? It's a rising channel. I don't know how I drew it, but it's there. And of course, a 2.1, you can call it, is a choppy market, meaning not a ranging, a choppy, which is visibly illiquid price, right? So there's no liquidity. It's just it's not even ranging. A ranging is a clear defined range, as you've seen me draw many times on Twitter, right? I draw when there's a swing low and a swing high, and it stays in between the swing low and swing high. This is a clear defined range of price, right? That's different than a choppy market. The chop is this over here inside here, right? But then again, one could argue that the chop on a higher time frame, as we saw, is a expansion on the lower time frame, because time and price are fractal. So due to the fractal nature of price, if you dig deep inside of a consolidation, you'll find a classic sell or buy candle, right, on the lower time frame. So consolidation, expansion. So
hey,
this
Robert,
could happen.
Can you give an example on BTC?
Sure. So, for example, which I gave just a few hours ago, right? But here you go. So you have this. Let's choose a very choppy, visibly choppy piece of price. Like this one, for example, right? We saw just now, remember? This one. What is this? When you see small candles like this on the higher time frame, small, visibly, so we're looking at the size of the candles, right? Size will tell you whether it's a consolidation or an expansion. So when you look at the size of the candle, a small candle like this will indicate to you a range on the lower time frame. We saw this a couple of hours ago, right? Zoom out. So this smaller time frame, this larger time frame chop, which looks untradeable, right? If you look at it as only an hourly chart, as a daily chart, excuse me. If you look at it on the daily, then it's chop. It's nothing. It's quote unquote low probability conditions, right? But if you look on the hourly, for example, Let's hope we can catch it in the hourly. Then you can find that it is a clear defined range, correct? So we went from a higher time frame chop to a lower time frame range. Remember the three market profiles? One is range, one is trend, two is range, and 2.1, which is part of range, is chop. So we went from a higher time frame choppy market to a lower time frame ranging market over here. And if you go to an even lower time frame, so a clear defined range with a high and low, right? Turtle soup, range low, range high, classic. So within this range, you have this candle, for example. This candle is a classic buy, yes or no? This one right here.
Yes.
So if you go to the 1 minute time frame, this was a trending day. It was like a classic buy. You can trade this by itself, right? Classic buy over here. Right. So this speaks to the fractal nature of price.
That would be like a market structure shift within that.
There would be a you'd also probably see a turtle soup or a failure swing inside there, right? Over there. The same, you'd probably see this. The same exact pattern, which repeats, pattern, quote unquote, which is
before the market structure shift idea, like you reckon, we had the low and the high, and you see price going down. How would you determine that, though?
Determine what?
We had your arrow right there. Before that, you can see the low and the high.
Right.
You would just wait. You would just wait into the market structure, or that low and the high.
Right.
You would just wait into entering, right? Then that would be considered a turtle soup when, right? Or
you wait for this, you mean?
Yeah. No, that would be considered a market structure shift.
I'm not talking about entries right now. I'm talking about the fractal nature of price, my friend, right? How to enter is number 4, right? We'll get to it. And this one specifically, right? But now I'm telling you that the chop on the daily time frame, which is untradeable, right? Untradeable chop, pretty much like this, right? So profile number 2.1, right? On the lower time frame, it is a range, right? So profile number 2. On an even lower time frame, it's a trend right here within this candle. How do I know? Because that's how candles work with the open, high, low, and close, right? This candle, you can see right now, it opened like this. It went below the opening price. It rallied. Right? Opening an OTE in between, as they do. It went and it gave a high, then it closed. Right? The classic 3 trades per candle, which I've said on YouTube. It's what it is what ICT teaches, right? So buy in a bullish environment, buy below the opening price. Find your pattern here, right? Don't just look for a pattern randomly. Find the pattern in the wick. So below the opening price, buy, rally, classic buy candle. So this right here, this is a trending candle in a range in a chop. Right? One day. So in summary, all those details aside, is we have the market types, market profiles, if you will, which is a trending market. So you open any chart, are we trending, are we ranging, or are we chopping, right? 1, 2, 3.
Romeo, the 2.1 is what you call a seek and destroy?
A seek and destroy is this, according to ICE. It's just going and taking liquidity. What's the definition of seek and destroy? Tell me.
It takes out the buy stops and the sell stops and the buy stops and the sell stops. Allowing no one to get profit. It sounds like 2.1.
Deci mănânc așa, nu?
Also this, right?
Yeah.
But a real seek and destroy in my books, right? It's not what ICT says. ICT goes and refers to any, not only him, like even the people on Twitter. They refer to any range as a seek and destroy. Nope. There is a way to trade ranges, right? My bread and butter trades come from ranges. So you have range, you have trend, and you have a visible chop. What's a chop? A chop is, and even the chop, as I showed you, is tradable. If you lower the time frame enough, if you go small enough, and eventually it'll fit, right?
And the other question was regarding the eliminate mistakes part. Yeah, while you journal, right? So you do.
I'm getting to it right now. Right now. No. This is just a side introduction to market profiles. So, eliminate mistakes. You mean this one or this one? Which one?
So the left one, when you said eliminate mistakes, is that it's always. Yeah.
What's your name?
Rob.
Robin, right?
Yeah.
Right. So you were saying?
So I was saying, you said that there is no bad market but a bad operator, right? But you do agree that every setup fails once or twice. So how do you actually identify if the setup has failed or you were wrong?
What you're doing right now, do you mean like live or afterwards?
Like, let's say I took a buy, okay, at a higher time frame PD array according to my model, okay, and then it failed. But
so the higher time frame PD array failed.
Te-am sunat azi dimineață.
So how do I classify if it was my mistake or if the price actually just failed?
Is that your question? Your question is, I entered at a higher time frame PD array, and the higher time frame PD array failed.
Yeah, the setup failed.
Then your analysis was wrong. You were wrong in your analysis. It's that simple. Why? Because when do higher time frame PD arrays stop working? When you reach a higher time frame liquidity pool, right? Then you can expect a displacement, and from there on, as soon as they start disrespecting bearish or bullish PD arrays and respecting bearish ones, order flow, basic order flow, nothing new. Right? So if it fails, then follow the order flow. It's that simple. That simple.
So you're saying like if it fails lower time frame, seek higher time frame.
If a if a 5-minute support level fails, go to the 15-minute. 15-minute support, a key level, a PD array. If it fails, go to the 1 hour. If a 1 hour key level fails, keep going up, right? And I'll show an example of this in the upcoming 2 hours, right?
Okay.
So, regarding eliminating bad habits. Bad habits. Bad trades, excuse me. Now, when you go through a process, and we're taking too long in this lesson, so I'm going to have to shorten this a bit. When you go through the process of writing down for every single trade the following, right? So me, for example, every single trade I take has this written down for it. A bit less now, of course, but every single trade is, for example, trade number 69, right? The number of the trade, the asset class, and two things, before and after. Right? Before and after. What's that? Before, I expect ES to bounce at weekly FVG and attack February highs. Right? Expectation. So before is the expectation. That is a horrible, disgusting handwriting. Whatever. Who cares? Expectation. And after is after it happened, of course. When did it happen? Where did it happen? How did my expectation play out? And how could I have done better? How could I have executed better? I entered too early, for example. I was trying to catch a bottom. Right? Too early. I got wrecked. Why? Because you wait for the first high that broke a low to be taken. Example. You don't wait for it to completely trade into pre-theory, for example, right?
Doamne. Nu, el îi pus
So
pe
when,
treabă,
where,
dar
how
nu
did it play out, and how could I have improved on my execution?
Să fac.
So when you do this for every single trade, because you have to, right? Imagine doing this for every single trade you take, not because you want to, because you have to.
Are și
And
momentul.
would you really even consider that
Am trimis poza cu mașinuța
that order block FVG
Deci
lookalike,
exact aceeași poză are
which you're trying to trade because you just because you want to press the
trebuie
button,
să o caute, să le
and
punem
feel the
una
thrill
lângă
of a
alta
win
și
again?
seamănă cum a făcut Sandu poza.
even though you're on a losing streak, right?
Foarte funny.
Would you? You wouldn't. So this makes you a lot more selective with your trades. It makes you take less trades, selective, right? It makes you a lot more selective and picky with your trades. That's how you want to be. Right? You can be,
Da, așa e de fain.
you can overspend trades in an expansion, like, for example, in a classic classic buy, you anticipate at least 2 entries, one over here for the turtle soup and one OTE, right? At least those 2, turtle soup, OTE, they're guaranteed almost, right? So on this price leg, you can overspend your trades, but generally speaking, you have to be super selective. And the process that helps you with this is doing this.
Accelerează cu pedalele.
Da, așa, fața
Helps you with this. Helps you with eliminating the trades is
ca la
journaling,
trotinetă.
right? So when you do it diligently because you have to, then by default you take less shitty trades. So that pretty much caps the foundation. Finally, took a bit longer than expected, but that's why we have disclaimers in life.
We still have 3 classes left, right?
Of course. Obviously, you're not going to go until you get all those 4, right? We may not, of course, as I mentioned, it's not A to Z completely. A to Y maybe X, right? Y and Z belong to me.
We'll get to Z.
We'll see, and we'll see about that.
Fac refill la cafea.
Fine. For myself.
Mai ai?
So,
Să mănânci croissantul.
Bă, aștept.
that is the foundation capped. This is how you think, right? So in summary, just a refresher, because when learning, the best thing you can do is take a quick review
Nu mai vreau.
after you learn, directly after you learn. Whether it's university, whether it's class, whether it's high school, it's whatever. The best way to learn is 1 review before the class, focus during the class, 1 review after the class directly, and 1 review when you get home. That way you've already seen it 4 times and you are golden.
Încă era unul cu
So,
bucată.
to review,
Nu m-am uitat.
what are the
Acum mă bucur
markets?
de el.
Yeah, you know, they're not a
CEO.
exchange place. Nope. 8 trade losing streak. Technical edge versus risk and reward. And finally, journaling. This is the foundation, the base way to look at price. All right. Now, any questions? Before we go into number 2, which is the mechanics, the basic mechanics of turtle soup and smart versus dumb money. So before we proceed, do you have any questions? Foundation? The mic is yours, my friends.
I'd love to know, Romeo, how you personally journal, whether that is by paper or on your iPhone, iPad, etc.
I first of all, I would rather that you guys don't ask personal questions, more charts, but I'll answer you, right? I personally journal on paper.
Cool. Thank you very much.
Pen and pad, Old school, right?
So do you review every week?
Every single day at the end of the trading day, before I sleep, right? Whether it's on the phone or whatever, I always have to take a look at the charts every day, every single day.
Hey Romeo.
What's up, buddy?
Well, besides the charts and everything that you look at, what do you see in the world economic? You know, you live in SCT, and how do you see your country like trying to like survive the war that's bleeding throughout the world?
Which war?
The Ukraine. The fake one.
Exactly. That answers your question. That is the answer to your question, my friend.
Do you see it bleeding to your country or the rest of the world, or how do you see it besides the topic right now?
You just called it a fake war, right? So that in itself is the answer to the question, right? So how can a fake war bleed to other countries?
I don't know. Maybe other countries just bleed into it.
It hasn't bled so far, has it? And it's been what? How long is it? A year? I think it started last February, right? If I remember, it was.
You're not wrong. Yeah, you're not wrong.
I remember why, because it was at the time that BTC bottomed temporarily at the range low. So at the range low, they declared the war, and then it rallied 50% almost. Right. So that's the only reason I know the war exists, is because it was a bad news at a bottom, right? That's the only reason I know the date it started. I think it was 22nd February or something. It was the swing low on BTC. Let's go and check.
Oh, wait.
There you go. I think it was right here. Yep. Zoom in.
Would you manage to trade if the United States would buy and send money to them or no? How would you consider the a BTC trade?
24th February, right here. This is the war. Look what happened after the war.
Yeah. That is the war.
So we were saying,
how would you consider the when the United States considered managing the money to Ukraine? Would you consider that like a buy or sell?
A buy or sell for what?
For the United States to consider the war, like sending money to Ukraine. You just pull up the diagram right there.
Right. So do you mean like would I buy or sell the equities, the dollar, what? Which asset class?
The dollar.
I don't trade news, my friend. I trade the chart. Right. I literally don't know the news is. The only reason I know the news, as you saw, is because of a range low. Right. A ranging market. We hit the low. Magically, there was news down there, but I was bullish anyway, right? Because of the range low. So I don't look at the news to predict the charts. I use the charts to predict the news, right?
Horrible handwriting. Good luck reading it. Typical doctor.
There you go. Some leaking on. Huh? Enjoy.
Are you like playing like recordings?
Nah, it's all good. So. Any more questions before we proceed?
Yeah, one more from you. Let's say you took a turtle soup entry, A+ setup, according to you, okay? But then it failed, okay? So are you going to tell yourself that you were wrong?
My A+ setups never fail. Right, but if it was to...
So you were this... Yeah, go on, sorry.
If it was to fail, right, then I'm wrong. I can never, and I will never blame price, right? It's always my fault. If I'm wrong, and I am wrong sometimes, right? But when I'm wrong, it's my fault. It's completely my fault. I misread the order flow. I misread the reversal time, the reversal point, the liquidity pool, something, the order flow. I misread something. So any mistake I made is mine, not the chart. I will never go and say shitty price action, right? I will say choppy price action, ranging price action, trending price action, right? Fast, slow price action, but I'll never say shitty price action. You know, it's all my fault.
So you'll never say it's a shitty setup too.
Hey, wait. I can't hear anybody that's talking, man. Let Romeo talk, yeah?
Journaling is essential.
Ken, you got that guy who has the recording in the background. Can you mute your mic? And regarding your question, Robin, what's the point you're trying to get to?
The point is, everyone agrees that a setup fails, right? How is it that possible that you can always tell that you were wrong, even though your setup would have been A+, but it still failed?
Misassessed the setup. You're not a robot. You're not an algorithm, right? If your setup failed, there was I can guarantee you that if your setup failed, then you made a mistake somewhere. And go back, look back at your A+ setups.
I hear your feedback. I hear your feedback.
Again and again. You don't mind, mute your mic, right?
When you catch a move,
This guy who's recording, mute your mic. If you don't mind, thank you.
It's Z1 Trader, unfortunately.
Z1 Trader, please, if you don't mind. Mute your mic.
Dude, my shit's done, dude. Like,
long enough.
1 second. If there's no order, my friends, then this fun will be over and I'll have to speak by myself, right? So please maintain order. So we were saying, Robin.
Yes, Ramya. I understood.
Right? So there is never, ever a time where price is wrong. Price is always right. It's whether you're in sync with it or you're not. That's all it's about. There's no other explanation. There's no other way around it.
Okay, thanks.
Gorgeous, beautiful. Look at that. So now we move on to number 2, which is the market efficiency paradigm. Oh, repackaged ICT bullshit. Fuck you. No, I'm focusing mainly on highs and lows right now, right? Of course, we all know the market efficiency paradigm as shown by ICT. You know, the diagram, smart money, dumb money. I won't be reteaching what he taught, but I'll be looking at it from a different perspective. Right? Because the concept of smart money and dumb money has always existed. It's the way the markets work, right? It's run by certain people. The markets are owned by a small group of people to sucker in a large group of people. So who is smart money? Answers. Who is smart money?
$1 million players.
$1 million player. Right. What else?
The guys who understand
You want to stand out, he said?
No, I said the guys who understand the algorithm, which the large funds don't.
Wrong. Smart money is a small group of people, right? Whether it's a small group of families or friends or whatever, right? We can speculate regarding who they are, but smart money are the market makers, right? Smart money are the market makers. And of course, then you have the sheep to be slaughtered, the suckers. Who are the suckers? Who are they? Another question.
Everybody else.
Retail.
Large funds, retail.
The suckers
uninformed. Sorry, mate.
Uninformed what?
The uninformed.
Who are they? Who is it? Me and you?
No, I'll say yeah.
It's not the way ICT Twitter makes it out to be, right? They make you think like if you watch an ICT YouTube video, you become smart money. Wrong. It's a small group of market makers who have always owned the market previously manually and now with an algorithm, right?
So previously, it was a manual operation of transfer of accumulation, distribution, transferring money, taking it from highs and lows to below highs and lows, right, and vice versa. Which used to be done manually and now is done algorithmically, with electronically, as we have moved into the new era of technology, right? That's how it works. The dumb money is the hedge funds, the institutions, and if you learned one thing from 2022, it's that hedge funds don't know what they're doing, right? You had FTX opening longs at 65K, some bullshit going on over there, right? Hedge fund, right? A lot of institutions going bankrupt all during the year, especially in crypto. If you're into crypto, then you'll remember every single hedge fund and institution, quote unquote, was getting wrecked. Who was wrecking them? Themselves? Nope. Smart money. Markets. Now, smart money has taught dumb money how to trade and use that to take their money. How? These classical technical analysis books, right? What do they teach you? They teach you to buy above a high, right? A double bottom breakout, and sell below a low, right? When you see a double top breakdown, right? So the classical technical analysis, every single school of classic technical analysis teaches you to buy above a high and sell below a low, right? And that is not the case. And in this teaching, this is the most important core part of all these 4 hours. So pay attention, right? This is the core, the essence. So all of you sitting in here, the guys who paid legally, illegally, all the goofball haters as well, everyone pay attention, right? Take some notes. So they have been taught to buy above
Hold on,
highs.
let me record it real quick.
And sell below lows. You can do that without saying it, my friend, right? Buy above highs, sell below lows. Which usually will lead to one of two things: a retracement to continue, or a complete reversal, right? When you buy above a high, then you are at risk of one of two outcomes: a retracement for continuation or a complete reversal. You follow? What they're taught in classical technical analysis, whether it's classical support resistance, Wyckoff, Gann, Elliott waves, right? Whatever it is, they're taught. Elliott waves less. It's one of the more accurate ones. But what they're taught in general is to buy above highs and sell below lows, buy breakouts and sell breakdowns, right? If any of you have been trading retail before, then you've seen that, right?
Nu îl pierd. O să mai ieși n-al dacă îți place.
Hey Ramya, can you go back to what you
Dacă
just
nu
saying over there?
asta, du-te cu Darii și vin și eu în jumătate de oră când suntem.
Smart money has taught dumb money to buy above highs, and for those watching later, there's a lot of things you're gonna have to skim through. But good luck. If you really want it, you will skim through them, right? So, buying above highs, and they expect price to do this. Now, how many times has price done this? In your opinion, in your eyes, in your experience? Not that much, right? What usually happens, and it's not just a pattern. What usually happens is something like this at a bottom or a top, right? Right? So it looks similar. They have tracked it to a close extent, but it's a completely different thing. And a side note, even the market structure shift SMC, quote unquote, traders, what they do is this. They come and they expect the shift to be like this, right? They expect this to happen. So how are they any different from these guys? Right? They aren't. They're all retail sheep. A real market structure shift, and I shit on market structure shifts all the time, but a real one, a true shift in structure where they are no longer interested in the same direction and they have changed order flow, right? They have flipped from bullish to bearish or vice versa. A real breakout will never give you an entry at the breakout position, or a very small, a very momentary entry, right? A real one will really expand. Everyone's going to chase, decline sharply. Everyone's going to be afraid over here, and then rally, right? So this is the logic behind the move. Bottom, right? And of course, always, every single time, there is the higher time frame PDRA involved. Always.
Can you give an example with BTC or something? Because
not now, not in a while. You'll get so many live examples, you'll get bored, right? Wait. So you have a low, the bottom's in over here. Look at the logic. Focus on the logic, right? Not the pattern. You have the low, bottom's in, right? You have a high, market structure shift. You get wrecked. Everyone's selling over here, right? They get wrecked. Everyone's buying up here, right? And the guys were short with their stops over here. Also get stopped down. It sinks deep inside. Everyone's bearish again over here, right? And it rallies. This happened in BTC just, and of course, this is another one of my live calls on Twitter, right? That is a habit which I've taken from ICT, which is fine, right? It gives trust to know that someone can call the moves beforehand, and it is necessary. The least you can do is, as I mentioned in the 3-hour rant before this, the least you can do is call price and explain it in a consistent logic. That to me matters more when I'm assessing somebody, if he's a good price action reader or not, because that's all that matters to me. I don't get your payouts, and I don't get a split from your payout, right? I don't get a cut from your profits, your P&L. That's yours. I don't give a shit about it, right? Can you read price? And can you explain it to me in a consistent logic? That's all that matters to me. Which is why ICT himself, right, got so many students off of demo trading, demo baller, right? Why were they so attracted to him? Because he calls price, right? And I'll always pay respect to him. He's the mentor of the mentors. He calls price and he explains it in a sound logic. If he never even showed a single execution, I can see what he's seeing on my charts, which is why I trust him. So the same logic over here, right? There's a key level at 16,200. I'll leave that for you to figure out, right? Figure that one out. So when we were up here, my target was 16,200, precisely 16,200. Go back in your charts and good luck with it. All right? So what happened here was exactly what I drew there. You asking for the example right here. And this one is not a hindsight example. And even if it is a hindsight example, I'm pretty sure that you won't find many people explaining it, even in hindsight, as good as this, right? So the key level is 16,200. False bottom, right? False bottom. It gave you a false double bottom, correct? It rallied into a breakout. Now, every single one of you, I'm pretty sure most of you at this point, right? What would you do? Give me some answers. Replay. Let me just make sure I've covered the important parts. Yes, I did. Right. Check it out. Where's the replay? On the laptop. I'm used to the phone because that's where all the trading and analysis happens. Where's the replay button? Damn. Is this different?
You got to move the toolbar that you up of your screen.
Where?
The risk reward. Yeah.
Right. My bad. So, what were you doing up here? What do you see? Let's go and pull out the good old replay button, right? The good old hindsight replay button. What would you be doing?
I would see a lot of consolidation. I want to see the high being taken on what is that? The 12th of September, or what is that?
What about that?
I want to see that being taken out of. But
why are you ignoring this? Why are you ignoring this shift in market structure?
I didn't know that.
You know now, and FVG as well.
But what would personally, what would you consider that?
I'll tell you exactly what I consider it, and I considered it right.
But wait,
for now,
where's the asshole that messaged me?
What do you say?
Wait, sorry. Oh, my bad. I meant to mute that.
Focus. So we were saying, what do you see over here? Answers.
2022 mentorship entry model, market structure shift, and fair value gap.
Beautiful.
And an IO FED.
All right. FED? What's that?
IO FED. Institutional or entry.
Institutional. Okay. Fancy terms, right? And what else? What else do you see?
Equal loss.
Very good.
That's fair value gap right there. That's a fair value gap on what is it? Hourly? Fair value gap on hourly and breaker. Old breaker.
Nice.
But the move is into a bearish fair value gap, right, on the left side.
Okay, but it shifted structure. So do you choose this one or this one? Which one do you choose?
It looks like it's the fair value gap is the high time frame.
Which one do you one by one? Which one do you choose and why?
I think the one.
If I'm being honest, I would choose the most recent price action, which is the market structure shift and the BISI, the bullish fair value gap below, which is not going to be the correct answer.
Well, we're dealing with the daily time frame right now. That you see that big ass candle, the red one. I'd rather choose that as a.
Okay, so you would rather personally with no system. So this, I would rather choose it because it looks nice. That's what you're saying. Give me a logic.
Liquidity. I actually choose the
one by one. If you hear someone speaking, please remain quiet.
Actually, I'll choose the inversion there because it actually has an inversion on the BPR inside. So, and I'll use the size of the candles, and I'll actually go for bearish.
Okay. You see, in hindsight, it's easy, right? Because you know the answers. But to really learn, be honest with yourselves, right?
I'm trying to tell you, like in hindsight,
see, this is a prime example of back testing, right? Back testing. When I back test, at least, I don't know about you guys, but when I back test, and I don't see myself superior to any of you, by the way. Just it's a simple sit down and talk with all of you, right?
It's not, yeah.
Showing you something which you may not know, right? About turtle soup, especially, right? So when I see this, I'm trying to live the moment, what would I think at the time? Bullish or bearish, and why? Right?
I see a breaker too.
I would say it's bullish because
Here's a breaker. Here's a breaker. Look at this.
Yeah, I see a
Here's a
breaker.
Bullish, buy side liquidity, right? Fancy term thrown around loosely.
before that, dude.
Exactly. Buy side liquidity to the moon, right? And you, Zlatan,
Well,
why did you say
yeah,
bearish? Why did you say bearish?
I say bullish.
I said bearish because
No,
of
Zlatan FX. He said bearish. Why? With a solid reason, not some random.
You're talking. The fair value gap there was bearish, and it was invalidated. Then price later used it more like a resistance, more like a support onto resistance. So it's an inversion. I'm gonna use that.
So you're gonna ignore the breaker, and why? It's a breaker by definition. It's a breaker. Why are you ignoring the breaker?
Actually, when I see equal lows, I try my best to see a reason why they set out those equal lows. I don't like taking setups that are below or above liquidity.
Good.
Why do you consider that as a breaker, per se?
Why do you not? I mean, if you look at the pattern for the pattern's sake, low, high, lower, low, higher, high breaker.
Yep.
Well, it's a broken breaker, right? It's not like
what do you mean broken breaker?
Broke that breaker because it's not for the low, but for the high.
Low, high, lower, low, higher, high. As solely a pattern, it's a breaker. Yes or no? Do you disagree?
Yes. For high time frame.
What's the breaker? What's the pattern? What's the pattern breaker? What does it say? Low, high, lower, low, higher, high, and that's a breaker, right? As soon as you close the body above the breaker, then you can use the breaker's body as the pivot point to enter from, right? Depending on the shape, of course. If the breaker has a wick, you choose the wick. But if it's a long wick, you choose the wick to the body. You prefer it to be a large candle, right?
That was a negative breaker until it was broken, right?
What do you mean?
That was a negative breaker until it was turned positive.
This one.
Yeah, that one. The above it. Where the box is.
There's no negative breaker, my friend. This is not a breaker. This is a bullish breaker, as a pattern, with no logic, with no.
It turned logical for the positive because it was broken. No,
which means are you bullish or bearish? Are you bullish or bearish?
Right now, what the signature says, I'm bullish now.
Exactly. That's the point. So how is it a breaker? Because of this, right? 1, 2, 3, 4. Breaker. Zlatan brought up a good point, is when you see equal lows or equal highs, right? The only time I will accept a bottom or a top to form with equal lows and equal highs is if there's an SMT, right? That's the only time. Generally speaking, equal lows and equal highs are usually price doesn't go too far away from them, right, before reversing. Not solely as equal lows, equal highs, as a pattern. Again, that's another pattern, equal lows, equal highs, right? There's a lot more reasons, and the correct answer is show me the higher time frame, right?
Yeah.
So you can't just say breaker. You have to show me the higher time frame. Now, another example. Let's go more into the logic. Of course, we know what happened over here, which is we went above a high. Those of you who were into crypto back then, you remember that everyone was super bullish up here, right? Everybody and their mama was super bullish up here, above this high. Remember, rule number 1 of smart money, quote unquote. Rule number 1 is buy low, sell high. Right? Buy low, sell high. Or don't buy high and don't sell low. That is the rule number one of turtle soups, right? This is the whole logic behind them. Is buy low, sell high, don't buy high, and don't sell low, right? Applying this. Now, that can be ambiguous, right? That can be, everyone knows that. All the retail quote-unquote traders know that. So, how do you measure high and low? Some of you already know this, right? Some of you who are in here already know what I'm going to say. How do you measure high and low? You measure it using, let's use a recent example, spikes things up, right? Let's use ES.
I live high and low.
What are you saying?
What? No, I'm listening.
All right. ES, highs and lows, right? So how do you measure high and low? And if you remember, on the good old Twitter, right over here. Good old replay, but this one is called live, so I've earned the right to dissect it in hindsight. So right here, what do you see? What do you see over here?
Market structure shift.
Market structure shift down.
Very nice. Beautiful. Excellent. So bearish, right?
Yep.
Correct.
Right. What happens next? Before that, I want to focus on this part where this day closed like this. Now what do you see? Shift, right? Market structure shift to bearish with an FVG. Everyone and their father and mother and sister and brother and cousins and everyone and their dog, if they had a dog or cat, whatever, or tiger, everyone was trying to sell this FVG. Probably some of you as well. Yes or no? Be honest. Don't lie to me. Was this on your radar for a sell?
Yes, I would.
I mean, you guys, I'm assuming you trade ES, right?
Yeah.
Exactly. So what were you thinking? This is a recent active trade. It's not some 1 year. So what were you thinking of here?
On the Thursday, before that large bullish candle printed, the daily time frame did make me flip my bias to bearish.
So you flip bearish down here, right?
Correct. Yep.
All right. And then what happened? Did you execute? That's normal, but did you execute based on your bias?
I did not execute. No.
Why?
Because of the weekly time frame, if I'm being honest.
All right. Very good. That is an excellent answer. Now, others answers. What do you see over here? What is this? What do you see? WDYS.
That is a market structure. I want to expect that fair value get to be filled. I would say.
Let's use you as an example. What's your name? 1 second.
Z1 Trader.
Z1 Trader. Let's use you as the example for this example, right?
Please.
Let me show you. Yeah. Let me show you the power of the higher time frame and what it can do to you. So, what happened over here is you're saying it's a bearish market structure shift, right?
Well, I wanted to go back into that.
What is rule number one?
Gray zone.
What is rule number one? Before anything, what is rule number one?
Approach the market. No.
Rule number one.
Approach the market with no consideration.
The fuck is that?
Don't buy or sell highs.
Nah, no. The hell is that? No, of course not. No. It's buy low. Right? So rule number one.
Sell high.
Buy low, sell high. Or don't buy high,
sell low.
Don't buy high, and don't sell low.
Buy high, sell low.
That's before anything. It's basic economics, right? Now, where do you find the best, the most expensive places to sell? You want to sell high, right? You want to sell for expensive, not for cheap. The best place you can sell is above a high.
Yes, sir.
The best place you can buy is below a low. Now, these are basic concepts not to be used by themselves. Otherwise, you're going to get wrecked. That's why we have market profiles. That's why we have PD raise. That's why we have opening time, right? That's why we have profiles. No market profiles, templates, rather, right? But the basic premise is when you learn a new concept, then you learn the basic bare bones concept, and then you build on it later on, right? So rule number one is buy low, sell high, don't buy high, don't buy. Now, how do you measure high and low?
I would assume with the premium discount Fibonacci, you know what I mean? We're just using the fib for that reason.
I measure high and low using, I measure high and low using 3 different. Why the fuck is this doing this? What is this? All right, never mind. So, number 1, using the IPDA data ranges. I think this is a magnet or something. 1 second. Let me go check. Right. So number 1 is the IPDA data ranges. They help you measure high and low, right? How does that work? Anyone knows? Nope. Right. IPDA data ranges. Number 2 is the dealing range. I'll answer. I don't answer right now. Next is the dealing range, which you measure the Fibonacci from. And finally, you have the. Let's write this down with clear. So how do you measure high and low?
Hey, Romeo, somebody's
as shown by ICT.
Somebody is Z1 Trader. Z1 Trader. If you do that again, I'm gonna have to.
Z1, can you mute? Somebody's like mocking you right now.
What he taught.
I'm gonna have to mute you.
Apparently, I have that shit on.
Because the
There you go. That's better. So there's someone I want to add to speak because he's an astute learner. Let me see if I can find him. If I can't find him, then later on. Please be found. Nah, I can't find him right now. I'll find him later on. So how do you measure high and low? By using the IPDA data ranges. That's number 1, right? Number 2, by seeing the dealing range of the low which you measure the fib from, right? And finally, the current expansion leg, right? These are the 3 criteria for measuring: are we high, are we low, right? So note this down. This is important. Let's look at the data ranges. So you said just now, based on only a pattern, you said market structure shift, right?
Correct.
Now, measure the data ranges. Apply all 3 of these. Get out of here. Apply all 3 of these data ranges. Count back 20 days. 1, 2, 3. That's 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, right? 16, 17, 18, 19, 20. 1 second. 26. 20 is over here, right over here. 20-day low. Now, what happens at a 20-day low, my friends? What is a classic pattern that happens, which is expected to be happening at 20-day lows?
Total soup.
Exactly, as seen in Street Smarts, right?
Yeah.
So first of all, we are now below, measuring the IPTA ranges, 20, 40, 60, right? We are now in the, according to the 20 IPTA range, we're now below the 20-day low. That alone is enough for me to be bullish or not bearish. You notice? So it's not being bullish only. If you're not sure, you can simply not be bearish. Right? So buy low, sell high. Don't buy high, don't sell low. Right? So by measuring this, you're simply not being bearish. So if it doesn't make you money, it saves you money. Right? This measuring high and low, quantifying high and low. And if you remember, right over here, I had mentioned a tweet. If you remember, those of you who followed, some of you made some money with that, so good for you. But right there, I had called the low of the week on ES, right over here, and we'll see right now in the market profiles as well. Okay? Why did this happen up here? Why did price not keep going lower? It's a shift, right?
Hedge fund managers are like, people are taught to sell when the 20-day low is broken on a breakout.
Let's check something else. Let's check number 2, the dealing range, the fib, the range which you pull the fib from, right? So I'm going to take a Fibonacci 2, go to the swing low that broke the high, right? Right here, swing low, which is a low, higher high, two higher candles above it. The way ICT teaches it, nothing new over there. You measure the fib, and what does the fib say? Are we high or are we low?
We are low.
Very good. What does the current expansion leg say? Visually, right? Visually. Of course, you quantify this visual expansion leg with the data range. But the current expansion leg, which is the swing high we're coming from, because every price leg starts with a swing high or swing low, correct? Every single price leg has a swing high and a swing low to kickstart the price leg, right? We have this swing high over here, right? 1, 2, 3, swing high. Are we low or are we high? Visually.
Low.
Low. So are you bullish or bearish?
Bullish, because it's below the
instead of using your market structure shift. Now remove this and remove this, right? So we're below a 20-day low, right? So the data ranges are saying that we are low, and the dealing range is saying we're low, and the expansion leg, the 3 criteria to measure high and low are saying we're low. So are you bullish or bearish?
Should be bullish.
It should be. And was it? Yes, it was. And this is where the low of the week was called, right over here, almost to the tick, right? As opposed to simply, now look at the difference between that scientific approach, right? As opposed to simply shift in market structure, right? You simply go, shift in structure, sell. That's pattern trading, right? That doesn't work. Maybe sometimes to sucker you in, but it doesn't work. So measuring these three reference points, right? To measure, are we high, are we low, right? We'll see 2 more examples, maybe a bit more, with this same exact.
Sorry, just before you go further, can you tell us from where did you calculate the IPTA data range?
From the current day.
Current day, but your tool only showed 14 bars, right?
Yes. I think it's just regarding the weekends. 1 second. Data range right here. 20-day. Don't look at the bars. Look at the days.
Okay.
Right.
Okay. Okay. Yeah.
Because
Sorry.
turtle soup, what is turtle soup? The 20-day higher low, right? Because turtle traders, which is a strategy as well, which it works, it's simply low accuracy and high risk to reward. They're basically gambling, right? Pretty much. So turtle soup is suckering those people in large money. Money can be large amounts of money, right? Being suckered in at the 20-day high and 20-day low.
Okay.
And was it being at the weekly fair value gap low?
Thank you for bringing that up, because combine these three, like you can use these three alone to trade one time frame, right? But now look at the same exact price leg, which you all said, every single one of you said it's a shift in structure, right? Now look at the same exact leg on the weekly. What do you say now? Are you bullish or bearish?
Bullish.
Bullish.
Is there any chance you can be bearish over here?
No.
No.
There you go. Beautiful. Excellent. Right over here. So at this point in time, now we don't need to look back that far. We simply look back for short-term trades. We look back to the previous 20, 40, 60, right? So in the weekly, I think it's going to be 8 candles. 1, 2, 3, 4, 5, 6, 7, 8, right? That's 60 days, correct? So you know everything else behind this. It's noise to you, especially for short-term trades. In fact, the 20-day range will give you the 20-day data range will give you a good setup. It's enough. That in itself is a model by itself, right? So most of the things I'm saying over here can be a model by themselves. It's simply about choosing one and making yours. So, are you bullish or bearish here? It is now. It was. Let me just double check. The month of May, I'm completely not dialed in the markets, but I was over here. It was April. So, it is Wednesday, right? So time. What is time? Time of day, day of week, right? Day of month, week of month, and so on. Time of day within time of day for scalpers, and so on. So we're hitting a weekly FVG on a Wednesday. What's going to happen? We're hitting the weekly FVG on a Wednesday while we're low, while we're beneath the 20-day low. What can happen?
Low of the week.
Thursday and Friday is going to be reversal.
Yes. No, but focus on the concept. I'm not here to parrot and repeat the already available ICT weekly profiles, right? The point is the same exact fractal and price on the 1 day. What does it look like? A shift, right? Correct?
Yes.
With an FVG. And this same exact price fractal, when you're looking at the higher time frame, you're seeing bullish. You're all bullish now, right? So if you're bullish now, then why did you say bearish when I first asked you? That's the question. Because you were focusing on one time frame only, which is incorrect. You can do it if you want to look at the charts with one eye. But when you look at only one time frame, you're blinding yourself, right? And the rule, of course, which I made up myself, which I haven't really seen anyone say, so I'm simply gonna attribute it to myself, which is a lower time frame market structure shift is less relevant than a higher time frame PD array. Go back to that one. Enjoy. So a lower time frame market structure shift is less relevant than a higher time frame PD array. Right? Let's write that one down. Lower time frame market structure shift is less relevant these fucking Spanish keyboards, less relevant than a higher time frame PD array. Now, this statement in itself is forcing you to look at 2 time frames. I know a lot of you are lazy, which is normal, or too lazy to consider the higher time frame. Like, you know, just fuck it, let me just trade this shift. But no, you're blind. A lower time frame shift is irrelevant in front of a higher time frame PD array. All right. So every time you see a shift in market structure, how do you apply this? Talk is cool. I can talk all day long. I can talk for hours. I've been talking for 5 hours almost right now, right? 3 hours, of course, as a bonus live stream for the early joiners, which I believe was recorded as well. So you look at that. But the point being that if you see any market structure shift, then you go and inspect the higher time frame, right? So, any questions about this?
For short-term trades, do you look at the monthly? Sorry.
What are you saying?
For short-term trades, you also look at the monthly, right?
For short-term trades, the 20-day range is enough. The 3-day and the 20-day range is enough to give you a nice short-term trade.
So then you wouldn't look at the monthly PD array?
I always look at the monthly every single time. Look at that. There you go. The reason I tweeted this, I'm sure some of you must have attended this tweet live, right? The reason I tweeted this was the logic I gave you right now is, number one, measure, are we high or low, right? We're literally below a low. And the rule number one says never buy high, never sell low, and buy low and sell high, right? So right over here, the logic was simply that, right? 20-day low into weekly FVG, and the 3 measurement points we have are telling us that we are bullish, not bearish, all right? And based on that, a simple tweet. It looks simple, it looks easy, but there's not a lot of thought. It becomes second nature almost eventually. But this is the thought process that went behind this tweet, right? Always same exact thing. So
but then would you expect it to dig deeper into the fair value gap a second time like we saw?
Again, this goes back to if you remember, I have a tweet that says there's 3 types of reactions to a key level, right? So when you have a key level, let's use the FPG for example, when you have a key level, right? The reactions from this key level can be 3 things. Whether it's a PD array, whether it's a support level, whatever it is. When you have a key level, the reaction can be one of 3 things. A V-shaped instant reaction, right? Or it's going to be a W/M shape, right? It's going to be a 2-touch, whether it's a turtle soup or failure swing, right? Or turtle soup, even. You see turtle soup right there. Or it can be multiple reactions to the same. Let me remove this shit. Remove. Or it can be the same. It can be multiple touches to the same level. Now, this one, of course, is the least favorable, right? This one is the least favorable of the 3. You don't want to see this. You want to see either an instant reaction, or you want to see the most common one, which is this. So the most common reaction we get is this. So it's not unhealthy to anticipate a second touch of a key level. Now, I wasn't anticipating this one to happen, right? However, the fact that we took out the previous week's high on Monday, right, and gave this order block, that is a reason to target at least this low. So I called for a low of the week over here. He gave us a bounce, right? So that's regarding being wrong and making money, right? So you can be wrong and you can still make some money. And it tanked, right? So when you see a rally early in the week, then it's always suspect. Nothing new. Power of 3. Right? So that is the logic behind the turtle soup setup. You see this? This is a turtle soup. What happened down here? You tell me. Dumb money got wrecked because we're talking about smart versus dumb money. Every single retail book classifies this as a sell, right? At least this or a retrace, one of the two. So every single, put it this way, the majority of people were shorting here at this previous support or down here, right? Except those who know, which is buy low, right? Sell high, or don't buy high and don't sell low. Right? If that rule doesn't make you money, it'll save you money. How do you measure high and low? You measure high and low using 1, 2, and 3. As we saw, 1, 2, and 3. Right? So that is example exhibition number 1, right? That is example number 1. Now, the same exact thing, because price is price and price is fractal. Remove. You guys want a break, by the way, or you guys good?
Good, man.
Yeah,
Good.
good. Question on. I got a question on Khan Barakat. He was asking. I'm speaking in behalf of Khan Barakat. He was asking, can you explain why you used that for dealing range about 5 minutes ago when you talking about dealing range?
Okay, you mean the range I measured the fib from, right?
I think so. Yeah, it was about 5-6 minutes ago.
All right. And you mean why did I choose this low? That's his question.
Probably.
All right. I mentioned it at the beginning of the fib pull, so you should be focusing, my friend, not you, the other guy, right? So it's the swing low. Just again, it's. I feel like this kind of stuff, especially the Fibonacci pulls, they come from your own experience and tape reading, right? So the swing low, that the most energetic swing low that broke the high, that broke the low, right? So that is my fib pull, personally. Right? You can even choose this one if you so choose. You can go a bit lower to this one, but the one I would use is this one right here. The same way good old ICT teaches it. So, do you guys want to break right now, or do you want to continue? You tell me.
Continue, mate.
2-minute break?
Yep.
See, you guys are watching, huh? I'm the one speaking. So, all right. You can have a break. You have 2 choices: a break and then example 2, or example 2 and then break.
An example 2 and then break.
I had a quick question, if you don't mind.
Tell me.
Yes, so regarding the IPDA data ranges, I don't have much idea about them. So the 20, 40, and 60, you used
If you don't have an
20
idea
days.
about them, if you
Again?
don't have an idea about them, then go watch month 5 core content, right? I'm not gonna go and teach you
All
this
right, I'll
stuff.
do that. All right.
All right. I'll teach how to frame not his stuff. Keep that in mind before asking a question.
One
So,
quick question.
Tell me.
So then, could you have traded non-from hero using this logic?
Do you mean the
Since
rally?
Thursday,
You mean the rally
yeah.
we had? If you were following my Twitter, then I called the low, right? Of the order block, of course, because I wasn't at the charts at the exact low. But as soon as they gave me the order block, then I called for a rally, right? Same logic. Nothing else. Previous week's low on a Thursday, right? When a higher time frame PDRA, a key level is matching with Thursday, then and they give you a reaction, right? If you want some confirmation, you are entitled to it. Then price simply has no option but to reverse, right? Digging into the weekly key level for the second time. Remember the concept of touching a key level more than once. Now here's an execution tip, right? Is when you the reason people have break even. So I'm sure it's happened to you where you have a trade you enter, right? You put the stop at break even, it comes stops you at a break even, and then it rallies, right? That's happened for sure. To all of you, to every single one of you, I can guarantee it. The way you can prevent this is by healthily anticipating a second touch of a key level, right? That's how you implement that concept into your trading. You have the bare bones concept, make it yours. Feel free to go and try it out, and it's yours, right? So, there's 5 hours of speaking, but I can go for days. So, example number 2 now. How's that sound? Good? Example number 2. Sounds good?
Sounds good, mate.
Excellent.
So
we've been going. When do we start, by the way? 10.
About that, mate. Yeah.
10, 11, 12, 10. Dang. Right, almost done. So now, again, what do you see over here? Answers are welcome.
Market structure shift. A few market structure shifts bearishly.
All right, so you're expecting to sell down here, a FOMO sell, right? Or you sell
I see an old 60-day low taken.
In hindsight, it's 20 out of 20, but I'm saying, what would you see at the time?
Probably we're on the midway of the sell side of the curve of a market maker sell model.
Who are you? Let me see. Who is this?
Hopium.
Who's speaking? Hopium.
Hopium.
Right?
Yeah.
All right, Hopium. That's a nice name. You into crypto or what?
I used to follow crypto, and then I like the concept of it.
I can tell. So, what happened here, Hopium?
So what I said was I would have seen this as the sell side of the curve has already started because we added SMT at the top at the end of February, and then we're probably on the sell side, so we're continuing down to take the original consolidation at the bottom.
All right, so a nice pattern.
And we had displacement below the low, so it's even more confirmation that we're going lower.
So be honest with yourselves, right? Now focus a bit over here. This is an important one. Be honest with yourselves, and what would you do over here at this point in time?
I probably try to short at the breaker, which is kind of at the high of that SIBI, on the daily CP. I'd wait for a retracement to short, basically. Yeah.
All right. Very good. And any other answers? More
No,
answers?
if I'm being honest, sorry.
If you're being honest?
If I'm being honest, yeah, I would be bearish as hell and want to look for shorts.
Exactly. Bearish as hell, right? Equal lows,
Yep,
man. Look
correct.
at this.
Yep.
Low. God damn. So, and what else? More answers? Any different answer? Because I know that most of you were bearish on Twitter. I saw all of you, right? Not you, but people in general. Every single person was bearish down here. Right? Now, luckily, I have the remedy to that, to the sickness, which is the market structure shift, right? What's rule number 1?
Rule number 1: buy low, sell high.
All right. Before we start, I want to invite somebody to talk who is DMing me. I hope I can find you. I can't. My friend Pip Smoke. All right, there's a few notable people over here who are astute learners and deserve to be praised. There he is. Allowed to speak. There are some others as well, but I can't see them right now. I cannot see them. So,
What's up?
what's up, buddy? How's it going?
You doing all right, you?
I'm doing good. I'm doing excellent. Here's someone else who wants to speak. Allowed to speak. Oh, this shit. So, being honest, I'm assuming you're all real traders, right? Who trade live accounts, who risk money day in, day out. Most of you, at least. So, what would your actions be down here?
You can hear me.
Hopium said selling. The other guy said selling. Bear says hell and selling. What else?
If I'm being honest, I wouldn't be bearish. I would start off with the weekly time frame and see what the bigger picture is.
I mean, it's a recommendation to be honest with the answer. Why? Because if you don't, you won't learn, right? If you don't be honest
I'm honest. I wouldn't.
What are you saying?
I wouldn't be bearish. Just for the fact that I choose.
I trust you. That you're honest. You're the only one I can trust over here. Well, almost, and a few others, right? About the answer. Because I've seen the stuff you send me on the DMs. But as a pattern trader, 99% of Twitter was bearish over here, right? How did I calculate the stat? I don't know. I just made it up, right? But everyone on Twitter was bearish down here. Why? Because of a market structure shift. The same exact logic that we saw in ES, right? Flawed logic, if I may. Now, rule number 1 is buy low, sell high, and don't buy high and don't sell low. Correct? Based on that, how do we measure high and low, my friends? How do we measure high and low? How do we measure high and low?
20, 40, 50.
Again, looking for the IPDA data range.
Yep. Number 1 is the IPDA data ranges. Number 2 is the dealing range, correct? Number 3 is the current expansion leg, right? A visual representation of the expansion we have experienced from the swing high or the swing low. All right. So measure them instead of now think about what I'm doing right now. You're changing your mind completely based on the information you have. So you're selling down here. Now, based on this measurement, which is rule number 1, always, right? IBDA, what does IBDA say? IBDA. Let's go to the data range. So you go 1, count from 20-day, low or high? Low, right? Nice silence. 40-day, low or high? Low. 20, 40. 60-day. Let's go to 60-day. So, as I said, for a short-term trade, the 20-day data range has enough liquidity within that range for a good trade, right? Short term. The deeper you go, the longer the range. The deeper backwards, deeper meaning the more back you go, the more forward you can cast. So we look back to cast forward. Data ranges, 20, 40, and 60. Right? And the 60. Let's measure all of them. 20 low, 40 low, 60. Is it high or low? What do you say?
It's in a discount of the 60 range.
Very good. Very good. Excellent. So we're low by all standards. Yes or no?
Correct. Yes.
Yeah. And why? And what does rule number 1 say? Buy low, sell high, or don't. If you're not sure, don't buy, because when you're going to apply this yourself, then you may be confused at the beginning, right? When you apply this, you'll be confused. So that's why there's a second part of the rule, which is don't buy high and don't sell low. Never buy above a high and never sell below a low, right?
Excuse me, Romeo. I'm not sure if you expanded on what number 3 actually means compared to number 2.
The expansion leg. All right, we'll see right now. We'll see right now. So IBDA is saying we're low, right? The data range. And what we're doing is we're measuring high and low right now. The dealing range is saying we are low. The low that broke the high, right? This one, we're actually at an OTE, right? Now, so we have 2 checks, which are enough. But the current expansion leg, meaning visually the swing high, right? Any swing high. Are we expanding to the downs? Are we visually down or up? From the most basic retail sense, are we down or up? That's what it means, right? Are we high or low right now? You tell me. From a raw, bare bones perspective, are we high or low?
Low.
Pretty low.
Exactly. Like, we're running downwards below 2 lows, right? Below these 2 lows. So all 3 are measuring and telling us that we are low. And the market structure shift is telling us we're bearish. So which one do we trust? Of course, we trust the truth, which is rule number 1, right? And your mic, if you don't mind, shut it. Thank you. Now we combine these factors together with the fact that we have let me remove this. We have a swing low right over here, which was my target. Right over here. And now we've come to the part as to why it was my target. This is the juicy stuff.
Excuse me, it's Mr. Ali. Your mic is on.
see.
It's liquidity below
So-
equilibrium of the dealing range.
It is liquidity below. It's basically
Equilibrium.
but why not this one? Why did I choose this one and not this one? That's the question.
That one is above equilibrium. They both are inducements, in my opinion.
All right. They both. So could it have reversed from here? Could it have reversed from this one?
Highly unlikely because
why?
Trading in a range, you could trade up to equilibrium, to the middle of the range.
I mean, right now you have, if you measure, it could have come and hit the 50%, right? It could have hit this rejection block or order block and rallied, right? So a turtle soup in 2 PD array. Why not?
Yeah, but probably rallied just for an OTE entry to go further deeper in the higher time frame.
What's the reason? There's one reason, a valid reason. Because see, by your logic, discount, right? It's premium. So right now, we have this. We have this low over here, and we have this order block and rejection block, right? So why can it not do this? Stops here, 50%, right? Discount, then it rallies. Why? What stops it from doing this? Fuck's sake. Why? Why this low?
As it's the first low in a discount.
No. Because of the weekly FVG. Right? So take a look at this fractal, which you all said is bearish, correct? Except Pip Smoke. I mean, logically, it's bearish. If you follow ICT like a parrot, right? High, low, higher high, lower low, shift, breaker, sell side, correct? That's the pattern trading, which is incorrect. You can't do that. Let's look at the same exact fractal on the weekly chart. Now what do you see? Are you bullish or bearish? And do you now see why I called 20,400 as opposed to only that? Now, bullish or bearish over here, down here?
Bullish.
No, clearly bullish, but
Is there any
bullish?
Is there a chance that you can be convinced bearish? APR.
No, if the bullish PD arrays are being respected, then no, there's no logic to be bearish here.
Liquidity, right? Liquidity purge. Not a stop hunt, a purge. Right? So we have this. And we have a market structure shift. You remember what I said about the shift? It doesn't happen the way you want it to. At the beginning of the session, I had a specific drawing with a specific logic, remember? Which is when one of you, I think it was Z1 Trader, he said, show it to us on a chart. Right? He didn't like the drawing I was making. So I showed it to you on the chart, right? And here's another example, which is low. Everyone screams, look at the narrative and the logic and the context. Low, below a key level, 16,200. Bottoms in, right? It rallies. Bottoms in for sure, right? It purges them, flips them bearish. All right? And then it breaks the high that caused the purge. The candle, the bullish candle that caused the purge, breaker, right? And it didn't go the way you expect it to, which is simply going like this. This is retail logic. It makes no difference than than any other retail trader, right? What happens is a much more psychological process, which is a low, a high, a low, a violent lower low, right? With the purpose, it's not just a pattern, it's the purpose of flipping the bias of the uninformed, right? Now, is this a candle enough to flip the bias of the uninformed? This one over here. You tell me.
Most
is this
definitely.
Candle, is this enough to flip the bias of the uninformed?
Mostly, yes.
It probably flipped off your bias too, right? As smart money, quote unquote, traders, correct? So the purge is not just random. It has a purpose. Every single price movement has a purpose and a logic. Right? Someone's getting fucked over, and someone's fucking them over. Every single one of them, right? So this is a real market structure shift where there's a high, a purge, a shift. And remember, note this down for the turtle supers out there. A real breakout never, or barely, but never allows you to participate, right? So when I'm looking for an entry, then all I'm looking for is two things. It's either turtle soup down here. If I miss it, which may happen sometimes, once in a while. If you miss turtle soup, right? Then you have an order block over here. If you miss that, then you have the OTE as a second major entry. So you'll be offered two major entry points by the market. At the beginning of any expansion leg, from the up or the down, right? You're offered two opportunities. The turtle soup and a violent retracement with the purpose of scaring everyone away, right? So you see that right here, and you'll see it all the time. It's how price books. It's how turtle soup happens. So entry one, this is another thing which I've not seen anyone talk about, but something I've noticed myself, right? Which is the sequence in which you catch the entries is entry one, turtle soup. If you miss it or you're unsure, entry two, order block FVG, stop loss turtle soup, low. And entry three is a violent retracement, OTE, whatever you want to call it, right? So we got exactly that over here. We got exactly that over here. Now, think about how different that is when you measure high and low, and you look at the higher time frame as opposed to the only looking at one time frame's market structure shift. And again, we apply here the concept. We apply here a concept, the same exact concept of of a lower time frame market structure shift is less relevant than a higher time frame PD array. You'll see that happen a lot, right? And I've spoken about many things right now, and many of them can be a model. But this is one of them, which is a lower time frame, a daily market structure shift is less relevant than a weekly. And now look at the monthly, right? And tell me if you flip your bias or not. Now, a bullish or bearish?
Bullish.
Can anyone convince you to be bearish inside this gap, monthly gap, right? Your mother, your father, your wife, anyone? Nope. Right? So all that happened was a higher time frame PD array, which is the key, a higher time frame PD array, more important than a lower time frame market structure shift with a turtle soup happening inside of the higher time frame PD array, right? That is why I chose this one. It's the weekly FVG, right? And gaps are rebalanced. It could have bounced from here. Keep that in mind. But this is the monthly FVG's beginning as well, right? So, and the monthly FVG was, I expected it to retrade to the monthly FVG. And that is exactly what happened, right?
Romeo? So
what's up?
Even if you say don't be a pattern trader, but on the higher time frame, we kind of are looking at patterns in a way.
You're not looking at patterns. You're looking at order flow, right? Difference.
Even though if it's a fair value gap and a breaker on the monthly, we have to trust it.
This is an application, by the way. This is an application of the concept which I said, if a daily key level fails, remember? If a daily key level fails, order block, then we move to the weekly, which is this one. Now look what happened. So this is a visual application of the concept. The daily order block failed. You look at the weekly and the monthly. And you're saying we're trusting a pattern on the weekly. No, we're not. We're trusting a logic and a narrative, right? Which is what happened over here. Smart money pushed this below the low. Everyone was bearish over here, accumulating positions in order to distribute them above this high, and this high, and this high, right? So
Romeo?
they pushed below this low, accumulation, right? Taking the position, accumulation over here, manipulation, gathering more positions, and distribution. AMD, power of three, classic. Nothing new over there either. It's just a matter of training your eyes to look at it. You were saying?
That November low, the candle which purged, that was the November low, right? That was into the monthly consequent of encroachment of the FVG. The 16,200 level.
Yes, that is one of the reasons. That is correct.
Okay.
Right? But right now we're not focusing on this one. We're focusing on this one right here. We'll be talking about this as well, this whole range and how it played out. But for now, we're focusing on this concept of two concepts right now, right? A lower time frame market structure shift is, I'll close the mic, is less important than a higher time frame PD array. And buy low, sell high. Don't buy high, don't sell low. You can simply look at the higher time frame, and that's enough. Right? It'll guide you. We turtle souped into the higher time frame PD array, and using that logic, bingo, right? I'm sure some of you caught this as well on Twitter. Turtle soup. All this is turtle soup. Turtle soup all over the place. Turtle soup over here. Turtle soup. Right? Now, I can give you the entry methods right now, or I can wait, be an asshole, and give them to you later, the next session. Which ones do you want?
Now.
Were you supposed to do number 3 first?
Exactly. That was the plan, which is to go through market profiles. This is, of course, this whole thing was showing the importance of a higher time frame PD array in case someone got lost, right? And all the noise. All this is buying low, selling high. Rule number 1, keep it in mind. If it doesn't make you money, it saves you money. And blending the higher time frame into the analysis always, right? A lower time frame market structure shift is less relevant, is irrelevant in front of a higher time frame PD array, right? A side note for those recording, I hope you caught these. You caught all this. You caught all of this. Did you? Did you not caught?
I have a doubt.
Romeo, Z1 Trader is asking you to unmute him.
What are you saying?
The Z1 trader who's recording, he wants to speak.
There is I had to mute him because of the noise.
Yeah.
My bad, my friend. So
Can I ask a question?
tell me.
The low that happened, the turtle soup, it could have digged deeper into that weekly FEG, right?
No, it couldn't.
How could you say for sure that it couldn't have digged deeper?
Because I called it.
Because of the breaker?
See, seriously, all jokes aside, let's see why it could not have dug deeper, right? The main reason being I called it. Second reason being, let's see right now. Where's Z1? 1 second. I have a question right now. Hold your question. Where's Z1? Muted. Vanished. Poor guy. Z1. Where is? Now, if you're binge watching this, right, as an entertainment, then you're not going to get anything. So I know some of you are already taking away stuff. Good for you. I see you, by the way. I see a bunch of people, a bunch of notable people. Always good to see you passing around. And where is Z1? You have to rejoin, my friend. Z1.
You know that
I got
previous question.
So you have a question, but before you ask the question, I have another question to answer. So let me just answer that. Allowed to speak. Z1, you have to rejoin, my friend. You're muted. It's not allowing me to allow you to speak. It is saying this guy records too much. He can't speak anymore. Allowed to speak. Exit, re-enter. I'll be back to you right now. So, why could it not have dug deeper? Why could it not have dug deeper?
Breaker on the left side in November.
What are you saying?
The breaker in November on the daily.
Very good. And we have, of course, this is a classic. Why do some gaps remain unfilled, right? Because of balanced price ranges.
Yep.
So when you have a inverted PD array, so let's assume we were on a sell side, and we've now flipped to the buy side of the curve, right? The PD arrays on the sell side of the curve, like this one, right, are going to be used as support on the buy side. And they'll create PD arrays similar to them on the buy side. And you can go back to that one and verify it. It's a basic ICT stuff, nothing new, right? So that's how you stop price from going down. Plus a breaker. And we know that breakers prevent gaps from filling. So when you see a breaker and it does fill a gap, then expect the gap to be left partially filled or completely unfilled, right? The monthly breaker as well, over here. And here's another one, which is a higher time frame gap will leave a lower time frame gap unfilled. Copy that one. Go and paste it on Twitter. Right? So the monthly gap over here was filled, right? The monthly gap was filled. So the higher time frame gap is going to leave the lower time frame daily gaps unfilled. You blend that with an OTE over here. So these daily gaps, not daily gaps, daily gaps. The question is, how do you know this one going to fill? This one. That's how I know, because of the BPR, the breaker over here, right? As we said, we can invert PD arrays and reuse them. But the most important thing for me is turtle soup prevents gaps from filling. But if you get a turtle soup and a shift on the lower time frame before the gap, what do? You wait? Nope, you enter. Right? So all these reasons blending together to give you no reason to expect a dig deeper. Could it have? Maybe. Was it likely? Nope. How do I know? I just know, right? It's chart time. Tape reading. The more you see something, the more likely movements you see. Like just by intuition, when I saw this happen, right? Just my intuition, when I saw this happen, then it was extremely unlikely in my experience that we do this, right? That we do, we go and we simply go and do this. It is an extremely unlikely price movement, right? But that's not a scientific explanation. Intuition is not a scientific explanation, which is why you have those measurement tools, the data ranges, buy low, sell high, higher time frame FVG into a lower time frame liquidity pool, and boom, you get a nice, juicy turtle soup. Right?
All the confluences are here, including open, high, low, and close, or open, low.
So it was exactly, and we come to the final part. I think you saw this with me before, right?
Sorry?
Zoe.
Yeah.
If your Zoe was talking.
Yeah.
You saw this with me before. Right. Okay.
Yeah, I was watching this.
I recognize the voice. So, replay. What happened? Let's go and check the monthly profile for Power of 3. Right, so time. So you have the beginning of the month, March, and you have the end of the month, April. Right over here. So, we have week 1, week 2, week 3, week 4, right? We had accumulation, week 1, manipulation in week 2, right? So what happens when, which is pretty much the London session of the monthly candle, right? So what happens when you get a manipulation Power of 3? Think of Power of 3. What happens when you get a manipulation into a higher time frame PDRA, 20 discount, 40 discount, 60 discount, right? All these discount ranges, plus a higher time frame PDRA, plus a liquidity pool in the previous 20, 40, 60 days, plus Power of 3, plus an OTE.
It's the perfect recipe for a smart money reversal.
You have this. This is why I was super confident and became a Bitcoin maxi down here, right? Temporarily, for a while, not for long. Right? So this is why right here, as it fellas, it is time to blast to 25, 27, and 32. Right? Turtle soup. But it's not only a high and low. That's the mistake you're making. Right? Those who send me on Twitter saying, oh, I tried a higher low and it didn't work. Fuck you, Romeo. Right? No, fuck you. You messed up. You go and check. You look at price holistically. Right? You don't look at price from one angle. You look at the whole. Ideally, of course, you go through the whole process, which is the good old ICT process, right? Good old mentor. The process, which is number 1, seasonal tendencies. Number 2, monthly bias. Number 3, weekly profile. Right? And number 4, time of the day. Of course, monthly bias with the data ranges are between these two, right? Because the monthly bias is the data ranges, 20, 40, and 60. And it's also the way it's two things. It's the data ranges and it's the way you expect the monthly candle to print, right? Bias versus narrative. Bias is why should price go where it's going. Narrative is where is it going, right? So accumulation, monthly bias, right? We expect a bullish candle on the monthly. Let's break this down from zero. Monthly, seasonally, of course, Bitcoin doesn't have that large of a history to have a seasonality yet, but it eventually will. When it lives long enough, it'll have a trustable. It does have a trustable seasonality in September and October, which is September has a rally at the beginning of the month, and it has a sharp decline mid-month, right? That is a seasonality trick on Bitcoin. So the point is that seasonality, not that reliable, so I'm not going to consider it right now. Monthly bias, we're expecting a bullish monthly candle. Why? Because we are inside of a higher time frame monthly PD array. Order block here. Now, what are the criteria for an order block? You guys know by now, right? After all this time following me. What's the criteria for a good order block? For a high quality order block? Anyone knows?
Created in a liquidity pool. Sorry, you go, Robin.
So not just choosing any down close candle, right? To choose a high quality, high probability order block.
It should be the one taking liquidity.
One takes liquidity. And
Thick candles.
Number two.
As an FAG.
Very good. Number three.
It's a thick candle.
There. Who are you? Very good.
Robin.
Robin, right. Right. It's a thick, heavy, bulky candle. Right? It's a nice, it is a thick candle, right? So based on that, the monthly bias is up, right? Go to the weekly. The weekly bias is also up, right? And based on those two, you can refine an entry to time of day, right? Weekly profile and time of day. I won't be touching on that because that is all on ICT's content, right? Maybe I'll show one example. I've had a turtle soup intraday, but that is something I will not be talking too much about. So weekly bullish, monthly bullish, and then you go to the daily. So you draw the PD arrays on the higher time frame, right? You draw the opening price. As you know, we want to buy below the opening price when we're bullish, and we want to sell above the opening price when we are bearish. So opening price.
Not a chill.
Now you go to the daily. Monthly bias up, weekly up. You can draw an opening to March, open, close. In a bullish market, right? This is pure ICT. It's not pattern trading. It is the way he intends you to learn it, right? Even yesterday in the space he made, same thing, but no one's willing to see, right? Everyone wants to find a pattern. In a bullish market, we buy below opening price and expect a rally, especially when there's a higher time frame PD array, and that goes into when can we anticipate a classic buy or classic sell candle, which won't be spoken about over here, right? In this one, but that's a little hint. You want to buy below the opening price into a higher time frame PD array, which coincides with liquidity pool, plus OTE, right? Dealing range. And you get a rally. Does it take some effort? Yes. Does it come intuitively afterwards? Yes. Is it a one shot, one kill? Yes. You enter over here and you chill. You don't have the sufferings of people who are waiting for an entry up here. and they get nothing. They get an iPad over here, and they're afraid it's going to come down here anyway, so they don't enter and it rallies, right? So buy below opening price in a bullish market and sell above opening price in a bearish market. It's ICT 101, right? That's the application of power of 3. Using a valid, high-quality order block, the monthly. So we can now get into the entry techniques. That's example number 2, right? An in-depth example. We got example number 1 on ES, right? Let's go to ES. Example number 1 on ES. 500. The same concept, right? A lower time frame market structure shift is less relevant than a higher time frame PD array. So always focus on the higher time frame, always. And the second example is BTC, USDT. Right? Boom, boom. And let's look at the power of 3 on the ES chart. Just for practice sake, right?
Romeo, so these were for short-term trades, right? But will you be talking about intraday scalps, things like that?
Very briefly. The main focus is on the logic, right? Because you can apply what's over here on the lower time frame, right? You can apply what's over here. I'll show you one example, right? Which I took myself, and that should give you a guideline to what to look for, right? Just a helper, as you know. All the information I'm giving you is a complement to what good old ICT is doing, right? The only new things you might see are, for example, the lower time frame shift versus the higher time frame PD array. There is nobody who said that, right? Shift is less relevant than a valid higher time frame PD array, right? And when you see a key level being banged more than once, if it's a second time, don't be afraid. Right? It's either a failure swing or a turtle soup. These are details of price, which you will get once you get used to them. So weekly open. Weekly close. We're digging into, now look at this, notice this thing right here. Accumulation, right? Manipulation, distribution. Down here. So weekly open, it rallies, expected decline, right? At least until New York of the week. We're digging into a weekly FVG on a Wednesday, right? So the higher time frame is bullish and the lower time frame is bearish. Which one do we trust? We trust the higher time frame, not the lower time frame, because a lower time frame market structure shift is less relevant than a higher time frame PD array. Now, pretty much the same thing, nothing different. So that is foundation done, and smart versus dumb money, a heavy one, right? And the higher time repeat array, done. The lighter ones, at least for now, are the market profiles, and that's it. That's pretty much the ranges and trends, right? So it has
Romeo,
taken
did-
more than 4 hours. It has taken more than 4 hours, but that's fine. I don't mind. The important thing is that the information reaches you, right? So
Hey, there's a question from
I don't think
Sahil.
you. Oh, sorry. Go ahead.
Yeah.
you don't think
He's
I what?
asked. Sorry.
You don't think what? It cut off, my friend. You said you
Go
don't
ahead,
think what?
Robin.
Okay, yeah. Romeo, it's Robin here. I have a question from a guy called Sahil. He's not able to unmute himself. So he's asked, could you please ask when a market structure shift would be important for order flow and when it wouldn't be?
Say that again.
When a market structure shift would be important for order flow and when it wouldn't be.
When is market structure shift important for order flow?
Mm-hmm.
Again, you're telling me to teach you something that ICT has taught you, right? But I'll give you my opinion on the shift, right? Which is what I gave you just now. If you've been taking notes, and what I've said already is more than enough, which is, first of all, it's a logic, not a pattern, right? As we saw in Bitcoin, as you'll see every single day on every single time frame. It's a high. It's an accumulation, of course. It's a false bottom, right? A false breakout, enigma pattern. A dig deep. So they think the bottom is in. A dig deep inside of this low, tripping them up. And then a true breakout, which does not allow you to participate. For Turtle Soup, this is crucial. If you're trading Turtle Soups, which I'll show you how to trade those two things, which I did right there, right? For Turtle Soups, this is crucial, right? A true breakout does not allow you to participate. Breakout. So entry 1 is over here. Entry 2 is over here. Entry 3 is a deep retracement. Forms an SMT over here and rallies. Right? So this is the market structure shift as seen over there. Right? So it's a logic, not a pattern. Some of you will see this regardless of how many times I say it's a logic, you'll still see it as a pattern. I can't help you. I can't help you. Some people are just destined to fail, right? But those who observe, it is a logic, not a pattern, and most of the time, you'll have this to filter out the patterns. The higher time frame PD array is a filter for patterns. Right? Now, entry techniques. Before that, of course, we have the market profiles, trends, and ranges, which is the bread and butter and the meat of it all. So this gives you a strong foundation to trust. All right. Now, do you guys want to break or do you want to continue? I've been talking for 6 hours plus. I can go on for 10 more hours.
I would like to break.
I don't mind. All right. You're watching, huh? I'm not talking.
I think we have a break.
If you want to break, you want to break?
take a break.
It looks like we might finish it today. What do you guys think?
I'm
Including
more than
the
happy
entry
to
technique.
continue, mate.
Including the entry technique at the end, right?
I'd like a few minutes to, get in a good
we take a
headspace.
breather. We take a breather, all right? Digest the information, like 10 minutes, 15 minutes, and then we continue with the profiles and the entry technique. What do you think?
I think that
I'm
sounds
fine
like a
with
good
that.
idea.
Good.
All right, excellent.
And during the meantime, could you add people who really want to speak because they've been DMing me this whole entire time and I couldn't even pay attention.
You become the spokesperson, huh?
I guess so.
All right. Well, you're a charter, so you probably already know the importance of a higher time frame PD array.
Hey,
The juicy stuff is now.
I'm just gonna say, even if you're a charter member, that all it means is you just pay for the mentorship. That's it. Not all charter members
Exactly.
are proficient.
I know that.
Trust me, there's a lot of people who struggling.
Exactly, because they struggling either financially or with the charts, right? Because they don't have a model. That's the issue. Is when you're struggling, it's only because you don't know what you don't know what you're looking for. Right? You just know everything. Shift breaker, order block, FVG, breaker, FVG, order block. What's your model? I don't know. A breaker, FVG, order block, shift. Right? Bots. You got to think. You got to pick a model and stick with it. So there's a 10-minute break for you, and we continue. I did not expect to give it all at once, but it is what it is.
I have a question.
Tell me.
Yeah. How would you measure the high and the low on lower time frame, like an hour or 15 minutes?
How do you measure the higher time frame?
Exact same way.
Yes. Now on the lower time frame, you can do the same thing. You can do the same exact thing.
Last 20 candles.
Last 20, 40, and 60, right? But the data, me personally, I use them on the higher time frame, right? You can use them on the lower time frame. You can use SMT on 15-second time frame. You know that, right? You can use whatever you want, wherever you want. It's not a matter of can I do it. You can do many things. You can trade a 5-minute candle profile with a 1-second candle entry, right? You can do that.
Yeah.
But what's my style is one shot, one kill, right? So I can do many things. I can scalp all day long, but I choose not to, right? Not personality, because you can trade whatever you want. Just my lifestyle, the way I live, the real life work that I have, right? My real life doesn't allow me to go and count 20 candles back on the lower time frame, but it is all fractal. Everything is fractal. Everything is a fractal. So every single thing I said just now, which applies to the higher time frame, is applicable to the lower time frame, and you can see right now in front of you, right? You can see right now. Same thing. Count back 20, 40, 60 candles. Counting, it has a bad rep. Same thing. Count back. 20, 40, 60. Lower high, great. Dealing range, right? The fib measurement range. Lower high, low, right? The swing high, right? Visually, just a bare bones, just a look, right? This comes with intuition. Lower high, low. And then you blend that, because you can say, you know what, Romeo, what about this? You would have been caught over here, right? Yes, that's why we have the PD rate, the weekly FVGs over there, to filter out a false bottom. Write this one down too. False bottoms and false tops are filtered out with a higher time frame PD array. Right? This is the key. This is the birth of every single turtle soup trade you've seen me call and take. Every single one you've seen, the ones that made you come and pay me money to talk, right? I took them using a higher time frame PD array every single time.
But
when I don't pay attention to the higher time frame,
right. Yeah.
What's up?
Go on, please. I was going to say that like ICT teaches that you need to have a set of time frames in which you have 3 time frames. So my time frame could be different from yours, right? So can we trust, like, if my higher time frame is 1 hour or 4 hours?
What does this
can
mean?
I trust that PDR?
Your name is Kaif?
Yeah.
All right. You can trust it. I'll tell you how. You can trust the higher time frame by understanding what a higher time frame means. What is higher time frame?
Time frame that is higher than the current one.
That's it. It's that simple. And you have that video again, as I've mentioned. I'm a complement, right? A supplement to ICT. He has taught me 90% of what I know, right?
Yeah.
Most of it. The rest of it is all Wyckoff, a bit of GAN, right? Classic technical analysis. That I still use some of them conceptually. The things that work within them, I use them till this day. So I'm not like your typical ICT trader, right? Who doesn't use anything outside of ICT, who never knew the markets except within the lens of ICT, right? That's not me.
Hey, Romeo.
What's up, buddy?
Robin here. Yeah. When you when you show the weekly time frame, yeah, I'm audible.
Cred că mai durează o oră jumate.
Yeah. When you show the weekly profile, right? You said that there are 4 weeks. Week 2 or week 3 being the manipulation, right? So the same thing on a 4-hour candle gives us the 1 a.m. to 5 a.m. London kill zone.
The same exact thing.
And that is the reason you focus on 3 to 5.
Correct.
Okay. But my question is, why 3 to 5 but not 2 to 4?
I mean, you can 2 to 4. I just find more setups in 3 to 5. But the classic, the way IC teaches it, right? He teaches it to look for the Judas at 2, right? 2 a.m. London. Only, not randomly. Again, another misconception, which is just randomly short any rally. When you're expecting lower prices, right? When you're expecting a classic sell or buy candle, what are the time frame? Because it's fractal. When you're expecting a classic sell or buy candle, then in that case, that is when you expect a rally, if you're bearish, and then a decline, right? You're using the opening price as a reference point, overbought and oversold. Right? That's what you're doing.
Okay.
No pattern. Your pattern is in the wick, as you said. Good old man. I'm positioning myself in the wick. That's what I'm doing.
Okay. And regarding the same question, if I go to the 1 hour and treat that as a 4-hour candle, the macros that ICT gave, the 1050 to the XX50 to XX10, they are the closing and the opening of the hourly before and the next candles, right?
Yes. That is correct.
Okay. So that is the significance of those macros.
Yep. It's all if you sit down, if you really want to dig in, if you sit down and reverse engineer the open, high, low, and close of the candles, right? What time certain swing points form, right? There's always the same time window, right? Where highs and lows form. The same time where liquidity purges happen, right? As we saw in Bitcoin, right? At time, the London session of the monthly candle, right? Over here's Wednesday, a typical power of 3, right? So if you sit down and dig deep into it yourself, you'll find some pretty cool stuff. Me personally, I found some stuff, but it's noise to me. Why? Because it's too low of a time frame for my lifestyle. So I think it's wiser to just do what he did, what he taught to do, which is buy in a bullish week, buy below opening price, vice versa. And in a bullish day, where you expect a bullish candle to print, you buy below the opening price, and that's it. So keep it simple.
And what do you mean by reverse engineering? I know it's a noob question, but
reverse engineering is simply dissecting the charts. You won't learn from social media. You won't learn from online people, right? You'll learn earnings afterwards, not at the beginning. You will learn from one person showing you the way, not teaching you, just pointing towards the direction, and you will go and study it yourself. That's the way you learn.
Right. Thanks.
If you expect to be spoon-fed, right, you will never learn. Never.
Noted.
Because then you will rely on his spoon feeding, right?
Right.
So the best way to learn, even turtle soup, whatever I was talking about for the past 3, 4, 5 hours, the best way to learn is, which is an important point, right? Because it's a lot of talk, it's a lot of concepts. Each one is applicable as a model by itself, but the best way to learn is through
By doing it ourselves.
No. Is by watching and predicting the candles print live. I saw questions saying, what is tape reading? Is watching, of course, the volume fellas, the order flow fellas, they have another opinion, but I don't care. Tape reading for me is predicting the candles, watching them live, right? Just and noting their behavior at certain times of day, days of week, and so on. So you look at them, how they react at certain highs and lows, at certain PD arrays, at certain times.
And does news matter towards these times? For instance, I see many times like the reversal of the manipulation happens at either 8:30 or 10 a.m. and that's because of news. Do you
the news matters only for a momentary reaction on the lower time frame, right? So that's why when you trade news, if you're into that, right? Everyone has some weird kink they're into. If you're into trading news, then you trade the news after the move has started, right? Not at the beginning of the move, because you're risking getting stopped out unless you use a higher time repeat array entry, right? Or you really know what you're doing, then you can do whatever you want. But that's it. That's it.
I guess it's more like
these kind of noob questions, by the way, huh? You guys are supposed to be intermediate, proficient.
No, I mean like my real question is more like, do you look at the exact minute? Like, does that factor into your model?
See, what's your name? Let me go check.
Hopium again.
Hopium again. There you go.
Yep.
Right. All right, Hopium. If you're really dialed in, right, which is you go to if you're really dialed in, right, you can catch tops and bottoms, keeping in mind the monthly, weekly, daily, and the daily profile in mind. If you're really dialed in, then you can catch swing points, right? Because swing points form at certain points in time. The highs and lows of the days of the week, of the daily candles, the weekly candles, they all form at certain points in time. So if you're really dialed in, you can do some pretty amazing stuff. You can snipe some pretty good stuff.
Yeah,
but again, this all happens all on off social media. If there's one recommendation I would give to everybody who is learning, right? If you're already know what you're doing, you can do whatever you want. But even for them, like social media is a distraction, especially for learning traders. It is who don't have their model yet. It is a distraction because you're comparing yourself to others. You're just you're not focusing on the main thing, which is tape reading and charts. You're too concerned with what others are doing, how well he's doing, how many RR trades did he catch today? Huh? How many 1 to 500 RR trades did he catch? The master, for example, right? Or whatever goofball is doing, whatever. Right. So the best way to learn, in my opinion, is tape reading it and getting familiar with it, making it your friend.
I have a question.
But familiarizing yourself with the charts, with the turtle soup, with how it happens, with at the high and the low, what happens at the high and the low, right? What happens over here? You go up here on the lower time frame, you look. And that will be discussed in entry techniques. Tell me. The break's over and I'm still talking. Tell me. What's up?
Okay.
Let's say, for example, the turtle soup is about to happen. Does it always have to touch or react from the HTF PDF array, or is it okay if it is slightly off from the level, key level?
It will always dig into a key level.
But if it is the case,
it doesn't.
I observed your Ethereum 4 or so.
My Ethereum what?
If it is the case, you said that it has to always dig into the PDF array, right? So if it is the case, I observed your Ethereum 4 hours chart. Did not dig into the weekly FVG, and you were confident that
because one of the reasons that gaps are left unfilled is turtle soup, right? We saw that on GBP. If you remember the analysis I posted, right, for GBP, gorgeous, just gorgeous. And we'll go through a bunch of just to revise the importance of the higher time frame right now, as soon as the break's over, which is now. So right here on GU, all right, on GU weekly. Of course, as we know, price is price. It doesn't matter the chart. Price is price. The only difference is some markets are consolidating and some are expanding. You just pick the expanding ones. So right here, you have this higher time frame gap, right? Everyone was expecting it to dig into it. Yes or no? Probably, right? But a turtle soup will stop a gap from filling, especially if there's especially if there's a lower time frame shift, right? A proper shift in structure, from a proper shift in delivery from bearish to bullish, then you can expect the gap to be left unfilled. And that answers your question, my friend.
When you
Now,
say
just
delivery, is that the
1 second before I continue with the rest of it? Let me dig into your minds what I'm looking for in my turtle soups, right? And from now on, my friends, you guys need to 1 second. Let me send you the some pictures of what I look for, right? Nothing new. It's simply the higher time. It's simply where does turtle soup occur, right? Where does turtle soup occur? So the break is over. I'm guessing we're good to go. Are you guys ready?
Bro, me,
good.
I gotta say this right quick. Everyone who's DMing me, please. I asked them twice already.
Okay, listen. Whoever has the mic now has the mic, right? FAQs. I'll open either the chat temporarily for FAQs, so that I can see the most common question and answer it collectively, right? Because it's inefficient. And it's not going to help anyone if we go and try and answer everyone individually, right? So collective answers, we're too many people for that. If we were like 10, 20 people, then maybe. But we're 1,000 people, though. So collectively answering the questions is going to be what we are going to do after the sessions are over, all right? I'm not even tired, not even a fucking bit. So I had something in mind. Tell me.
Can I ask a question?
If it's interesting, yes, sure. Tell me.
Okay, earlier you said that you're going to show us when a support level fails, go to the higher time frame. If a 5-minute support PDRA fails, go to the 15-minute, and so on.
Yep. Yep.
Can you please that
That is correct.
once?
What are you saying?
Can you please show that once? An example of that.
Here's an example right now on ES. You don't need to look far, my friend, to see the concepts working. Right? So this is something I had paid attention to I had called on Twitter as well, right? Which is, I said, if this daily order block fails, right? Focus. If this daily order block fails as the weekly low on Tuesday, then I'm waiting for it in the weekly FVG, right? So the daily order block failed. We closed beneath the mean threshold. So we can expect the weekly FVG to be the next support, and it did. Yes or no?
Yes.
That's it. So the daily PDRA is failing, which means we go straight to the weekly FVG, and it held. Yes or no? Do you see the visualization of the concept?
Yeah, I do.
If this fails, you go to this one. So are we ready to go into market profiles? Because I'm ready.
Since you talked about GBP, one thing I noticed was that the reason why price went down one more time and didn't fill in the weekly gap was because it was the CE of the monthly BISI, right?
That is another reason. Is higher time frame
reason?
gaps. That's another reason, which is higher time frame gaps. Right? They stop lower time frame gaps from filling. I'm telling you a lot of stuff, and if you're not paying attention, you'll simply ignore it.
And I think what you said before was that if price almost reaches the CE like it did before, but hasn't yet, you expect it to soup that low, right, and touch the CE, and then that's when the real rally begins.
50% of any price leg is a good place to look for turtle soup. Write that down and enjoy. Right? 50% of any range is a place where I expect a continuation turtle soup. Right? That keyboard is too loud. That keyboard is way too loud. Right? So 50% of any price leg, any range is where I expect a continuation turtle soup to happen. So now the differences between the turtle soup. I saw some goofball on Twitter, copy one of my tweets on turtle soup, which I'll be showing you right now. Right? So and after that, of course, we're going to go through the market profiles real quick. We won't go as in depth as I wished because the time is going tight, right? But that's fine.
Deja 4 ore și am mai vorbit 3 înainte și n-am
You'll
prins.
get more than
Au început mai devreme.
what's needed, much more.
Am dormit și n-am prins.
And I hope someone's recording. It's a lot longer than expected. I've been here since 7:30 a.m. So it's more than 4. It's more than 6 hours. But that's fine. The important thing is someone's recording. Is someone recording the whole thing?
I have a recording of 4 hours, 23 minutes going on as of now.
Since 10, right?
I have also recorded this.
Now, to everyone sending me messages saying, you don't love me, please let me talk. I don't give a shit about anyone, right? I'm here to teach. So it's nothing personal, right? I'm here to display something. So it's not about you, right? It's not about you. It's not about you as an individual person. It's about the collective environment of 1,000 people. I can't physically allow each person to talk because that would take all day long and it would not be efficient, right? Neither would it be useful. So collective answering is what I'm going to do, all right? So it's not personal. I am never personal with anyone, right? It's about the idea. Think. So, that being said, Yes, Chris, it's a long catch up, my friend. I've been here since 7:30 a.m. And yes, the recording will be available. Listen, one of you, this guy called Rip, I'm reading his DM right now. Count 4 hours backwards because we started at 10:10, right? My time, Spanish time. 10:10, 11, 12, 1, 2. All right, so 4 hours over right now. So someone should have 4 hours of recording right now, right?
Yes, I do.
All right. So excellent. If you have one, then excellent, and good job. You might get an extra tip on how to soup turtles. So right now, we go into market profiles and finally the entry technique, which is a whole, which includes the entry, stop loss, and targets. Right? Now, I wish I could go as in depth, but my time is running tight, so I expect to be done by 3:15 Spanish time, more or less. Right? 3:15 Spanish time. Right?
Then how about we do it next weekend?
It's 1 hour left anyway, right? So we're done already. We're done from 7 to, we're done with 6 hours plus already. So 1 hour extra is what? So we finish now, and then we do the FAQs. And next weekend, I'll give you all an extra hour to answer the FAQs. How does that sound?
More than fair, mate.
So we finish now, and then I'll let you collectively send your questions about the stuff I discussed, right? And I'll answer every single valid, interesting, collective question, right? So think before you ask. Don't ask obvious questions. So, market profiles, which is an essential part of turtle soup, which is why I could have skipped this, but I'm not going to skip it, right? Because it's essential to not get caught in a fake turtle soup, right? In a fake false breakout. That's a shame. So, we have market profiles, as I gave a rough outline of. We have trending markets and a ranging market, right? Trending markets, and we have ranging markets. Now, before I continue, right? A lot of you are probably sleeping by now. I hope not, for your own good, right? So I hope everyone's active and watching and taking notes, because the best way to learn is to actively engage, whether it's writing or talking, right? That's the best way to learn something, or even revise, not even learn, right? So the best way to revise and learn something is to actively engage in it. Plus you have this recording later on to review as much as you want. It is yours. And I would hope it stays in the group, right? I would hope it stays within the walls of this group. Even if it does somehow find a way partially outside, then it's too dense anyway, so nobody's going to give a shit, right? But I hope that you value the knowledge, the environment, and respect the money you paid, the time you invested, and my throat, which has been talking for like 7 hours, right? You probably won't give a shit anyway, and do it anyway, I know. But that is my, that's what I can say about it. That's what I can do about it. So, trending markets and ranging markets, all right? What is a trending market? Anyone? Answers.
In a bullish trending market, highs are being taken constantly.
Highs are being taken? Nope.
Expansion.
As we all know, I look at the market from highs and lows, right? Perspective of highs and lows. I don't look at, but I do look at order flow, right? Order blocks, FVGs, which one is being respected, which one is being broken. I'll show you an intraday example as well, just so, because I know that the ICT community is a bunch of scalpers gambling the 1 minute chart, which can be done. But if you can't even call the higher time frame correctly, then you have no business trading the lower time frame, right? That's a note for all of you. You're trading the lower time frame without first mastering the higher time frame, which is why he also, even in his mentorship in the core content, he teaches the higher time frame first, and the last thing they talk about is the lower time frame. All right. So what is an uptrend, my friends? Someone said highs being taken. That's incorrect.
Well, not taken, but broken. Like broken.
Very good. Excellent.
Violently.
We're gonna go and do some good old hindsight, right? Let's go and do some good old hindsight for once. I think I've earned the right to do some hindsight, which is not a hindsight because I lived it in the moment, but it's hindsight to you guys because you did not witness it. So, but of course, as we know, history of the charts is a gold mine. History of price action is a gold mine, and it repeats itself for those who have eyes to see. So, a rough depiction of an uptrend. What classic analysis teaches you is higher highs, higher lows, right? Prices climbing, higher highs, higher lows, correct? What actually happens is, I mean, you've probably never seen price do this in your life, right? And go and move in this fashion, never. What happens is this. And if you say you did, you're lying. What happens is this. Let's include that one. What happens is rejecting highs and rejecting lows and breaking highs while creating higher highs and higher lows. Rejecting lows, breaking highs. Rejecting lows, breaking highs. And what is a downtrend?
Breaking lows, rejecting highs.
Excellent. Beautiful. This is the recipe, as you'll see right now. Rejecting a high and breaking lows, right? So then we flip from breaking highs, rejecting lows, to breaking lows and rejecting highs. Right, so this is what's meant by market profiles, and this is a super important part of turtle soup. So there is so I can talk for days, but I'll try and filter out the information. So rejecting lows, breaking highs, while creating higher highs and higher lows. This is turtle soup. Now, as we know, markets move in expansions and consolidations, correct? Do you disagree? Anyone? Nope, you better not. Consolidations and expansions, right? What is the meaning of a consolidation and what is the meaning of an expansion? Someone, let's start with the consolidation. What is the meaning of a consolidation? Because we have to be able to explain every single price leg in price, right? With a logic and a narrative. So what's the meaning of a
consolidation? Price
consolidation means.
So in a consolidation, price actually the market builds up liquidity on both sides of the market.
Right. The market makers control the market. They have a job to generate interest in price, to suck in participants, right? The way they do this is through the power of three, which is not a new concept. And for the neophytes who think it's an ICT created concept, go study a bit more. It is an old economic concept, right? So go and read some books, right? Accumulation, manipulation, right? Distribution. Which again, I repeat, is not an ICT concept. It is one he popularized, like most of his stuff, right? Props to him. He's the mentor. Thank you, ICT, right? Mwah, ICT, thank you very much. You're the mentor of the mentors. You're the best. But he did not create these concepts. Know your history, all of you, right? Now, he did refine them and combine them in one place, which is good. So good job on him. Nobody else did that, right? Gann, Wyckoff, supply and demand. He combined them all in one place, right? And made them popular. So without him, none of us would be here. I wouldn't be here. I wouldn't know this stuff, right? But know the history of what you're studying. Don't just blindly follow. Think and know the history. So, all that too. Explain the power of three. Accumulation, manipulation, and distribution. Now, what's happening over here in this pattern? There's always the market makers fucking someone over and somebody getting fucked over, right? Accumulation is generating interest on both ends of a range, a clear defined range. Now, this is where turtle soup is cooked, so pay attention, right? A clear defined range, it breaks through the range, grabs the liquidity, accumulates the liquidity from above these highs in order to distribute them below these lows, right? And then, of course, expansion in order to sucker in more participants. So they're generating interest on both ends. So breakout traders are looking to buy and sell a breakout, right? But breakouts don't occur the way that turtle traders think. They occur in a specific logic and pattern at a certain key level at a certain time. You combine them all together. You don't just blindly follow a pattern. Let me drink some water. Bismillah. You guys can take a break too. Have a drink or something for 1 second. So there's a logic and a pattern behind every move, and a pattern behind every price move. You should be able to explain to me, what's this price move do? What's the narrative and the context and the bias? Based on what? Right? You can't just blindly say shift, order block, FVG. Why? What is each PD array? Maybe in the future, I'll be dissecting. I've dissected the order block, right? I'll be dissecting each PD array and the logic behind each PD array, right? I've done the FVG and the order block, and maybe the rest later on. So, accumulation, manipulation, distribution. The purpose of a range is to accumulate and generate interest on both ends of the market, correct? And then trip one end of the range to the other, right? We'll see live examples, don't worry, for those of you who are critical of drawings. But the way to learn, for those of you who may have a slight subconscious issue, the way to learn is to first try the most basic concept and then build on it later on, right? You can't go and apply the most advanced concept without understanding the basic one. You can't go and trade a 1 minute chart blindly without knowing the higher time frame. So range, the purpose is to accumulate, generate interest, manipulate, and then distribute, right? That's a fucked up drawing. So what is an uptrend, my friends? Describe to me the logic of an uptrend. The mic is yours. There's around 20 people at the mic.
Price respecting
Consolidation,
British
expansion,
PDAs.
consolidation, expansion.
One by one. One by one.
I would
Price
say
is-
consolidation. Sorry, you can go ahead.
It's okay, man. Go.
Okay, I would say it's consolidation, expansion, consolidation, expansion. In that phase, that's a trending market.
All right.
Consolidation, expansion, and duplication.
No.
Yeah. Any other answers?
In trending market, if it is bullish, it will be breaking highs and rejecting lows. If it is bearish, it will be breaking lows and rejecting highs.
What does that mean?
If I may. So in an uptrend, even though price is moving up, people will still be protecting their positions at swing lows. So before
Those people.
Dumb money.
All right.
Right. So they're always protecting and moving their stop loss up. So what the smart money will do is they'll sweep those lows to grab more liquidity and knock people off their positions before moving in the true direction of order flow.
Right.
And that's what keeps repeating until they're net short again.
Very good. That's the closest answer, right? Don't repeat patterns. Repeat a logic. And if you're wrong, dissect the logic, right? And you realize it's the same logic, which is repeating again and again and again. It's simply it's a matter of you being in sync or not, right? Because once you know the logic, once you know price, all of you, once you know price, then after that, it's simply a matter of being in sync or not, because you know how price moves, which is why the foundation was all about RR and the irrelevance, pretty much, of an edge, right? And then the next 7 hours talking about an edge, right? But you have to be in the correct frame of mind. You have to think correctly. So, you are correct. Highs and lows can indicate to you whether smart money is net short or net long, simply by looking at highs and lows, rejecting highs, breaking lows, right? Example, we'll see at least 3 examples. Some old, some recent, more recent. So what's happening here to this low? What is this? What's happening here?
Rejection.
What's happening to this high?
Breaking.
What's happening to this high? Broken or rejected?
Broken, it's closed above.
Broken.
Very good. Again, a characteristic of a true breakout is an initial rejection followed by an expansion. That's a real breakout. That's how you classify whether it's a good retest, quote unquote, candidate for a continuation play, right? What happened to this low here?
Rejecting.
Right, so rejecting highs, right? And breaking lows. What happened to this low over here? This low. FVGs are lows, yes or no? FVGs on the lower time frame are a swing low with liquidity below it. So what happened to this low? Broken or rejected?
Rejected.
There was a pause, huh? Rejection is the refusal to expand above a high or below a low, whether it's instant rejection or consolidation below the low or above the high, right? And because price is breaking highs anyway, we expect it to continue. Discount low, right? Soup, boom. What happened to the high? Broken. What happened to the other high? Broken, right? Breaking highs, rejecting lows. Why did you choose this high, right? Choose the logical high, which will have a liquidity beneath it and above it, right? You can't just choose any random high and low. You can't just go and choose this one, right? But you can to target this low as a short-term trade, but as an overall market profiling, you choose the obvious, as you'll see, swing highs and lows, right? So what is this? Tells you that smart money is net long, right? What does that mean? That means they're accumulating below lows and throwing the positions above highs. What does it mean when they don't stop at this high? It means their position is so large that they need to go to an even bigger liquidity pool at a higher high, right? That is the logic of an uptrend, the explanation of an uptrend. As I said, every single thing is explainable. So, accumulating, pushing higher. Breaking highs, meaning they have a large position, we target the imbalances and highs, right? Turtle soup, right here. Good old turtle soup. Turtle soup. So this is a trend continuation turtle soup, right? The rule says in an uptrend where we are breaking highs and rejecting lows, we buy the dumps below the lows as turtle soup. All right? Now, in a downtrend, we sell the pops above a high as turtle soup. All right? We sell the pops. Any bullish pop above a high, turtle soup at once. Why? Turtle soup. So, breaking highs, rejecting lows, turtle soup, turtle soup, turtle soup, right? And then finally, we reach a long-term liquidity pool, which is the previous 6-month high. And over there, we start rejecting the high. So all during these 6 months, not a single high was rejected. Think about it. All during this uptrend, not a single high was rejected. And you can go and double check me on that. As soon as we had the first rejected high, when I told you I think in the market in terms of highs and lows, this is what I'm saying. As soon as we had the first rejected high and we broke the first swing low, then it was down from there. We broke the high, the low that broke the high, which means it indicates that smart money is not interested in longs anymore. They were refusing to accumulate, to expand below. They're protecting their positions, right? They have positions which they want to distribute to a higher high. To accumulate, distribute, right? Finally, they reject the high, suckering in people in this false breakout, As we know, the previous week high, previous week's high, previous month's high, previous day high, right? These are all liquidity pools which offer valid bounces, short-term for you scalpers in there, short-term bounces, right? Previous candles highs in general. So liquidity pools, right? You have an old liquidity pool being rejected and now broken. So now we went from breaking highs and rejecting lows to breaking lows and rejecting highs. And that is the logic of a market structure shift. So think properly. They no longer have interest in protecting lows after a long 4 or 5 month uptrend. They broke it, which means you can safely assume after taking out liquidity pool, turtle soup, right? So you can safely assume that they are net short now. And any bullish pop above a high is turtle soup. Turtle soup right here. Turtle soup right here. And here comes a quiz. Here comes a trick question. So, what do you see over here? The mic is yours. Let me go to last other people. Maybe you got some interesting folks hanging around. So what do you see? Krishna, let me allow this guy in. Allowed to speak. What do you see over there?
Price broke highs.
Speak with your hand and I'll let you speak. Don't DM the poor guy. Or just raise your hand. And you'll have answers. You'll have a chance to ask questions anyway afterwards, right? So don't worry. You will have a chance to answer the questions anyway. So what's happening here? Up here. And before you say that, what do you see up here? As we speak right now, what do you see? All of you, what do you see? Focus and be honest with yourselves. What do you see?
Market structure shift.
Beautiful. Excellent. Anyone else?
Yeah, price broke highs, a market structure shift, and a fair value gap.
So bullish, right?
Correct, yeah. Should be with that
Bullish?
logic, yeah.
Bullish targeting these equal highs, right? Bullish buy now. Where's your stop loss here? Because when you think about price, here's another thing. When you think about price and trade idea, always think in a stop loss, right? Because otherwise it's useless. You're pretty much not trading. So when you say price is going up there, always have an invalidation in your mind, whether mentally or written down. Okay, that's practice for execution, practice for stop loss placement. So we were saying, where's the stop loss right now? Where is it? Down here?
It shouldn't be anywhere near that.
Here?
We're trying to buy at the high end of a range and into a weekly order block.
No. That's you right now. But I'm saying, what does the average... What do most of you see, if you're being honest with yourself right now? Someone said a break in...
okay, just on
break
this chart should be below the bullish order block to the left. A safe stop loss placement.
This is a breaker. What do you mean? This is a breaker.
Oh, actually, yes.
High, low.
Yeah.
Low, high. So it's a breaker. Why are you bearish? Let me dissect your thought right now. Come here. Why are you bearish over here?
Yeah, without further information, you would be bullish, clearly.
All right. So anyone else? So you'd be bullish because of the pattern, right? Pattern, bullish. Anyone else has an answer as to what is this?
No.
As price taking lows and breaking highs on a previous, I think it's on March.
All right. So are we breaking highs? And are we rejecting lows?
Yeah, we are rejecting lows. Sorry.
Even though there is
the lows.
Even though there is a market structure shift, we have to always look whether the price has tapped into the higher time frame liquidity pool. Then we can confirm that the market structure break is
all right.
valid.
First of all, we are above a liquidity pool. What's the rule say? It says never buy high and never sell low. That's rule number 1. Right? Every single one of you who lived this live would have considered at least a shift in structure, right? At least considered it. right? Just to keep you guys happy, right? You'd have considered a shift in structure with this breaker and FEG, whatever. But rule number one would save you. Rule number one would have kept you safe from this wreck, right? Which is never buy high, never sell low, buy low, sell high. Now, you blend that in. First of all, let's measure. How do you measure high and low? How do you measure high and low?
IPDA.
And the dealing range and the expansion leg, right? Just a visual look. The two important ones are these two for me, right? 1 and 2 is more important than not iPad, IPTA. So count back 20, 40, 60 candles. Are we high or low right now? If you count back these candles.
We are in the high.
Exactly. 20-day high. Right. 40-day high. 60-day high. We're high. Now, dealing range, high or low? Are we high or low?
High.
All right. The expansion leg, the swing low. Are we just visually, roughly? Are we high or low? So you have roughly, and you have a measurable, quantifiable way, right? So we're high in all three ways, right? Now, if you're in doubt, because obviously price doesn't look the same, it looks similar, but not the same all the time. So if you're in doubt, then always, what do? When in doubt,
stay in the higher time frame.
When in doubt, zoom out. Right? So delete all of this shit. One week. Now, what do you see now? Are you still bullish on a shift in structure? I draw this, and it's in my mind. I don't need to draw it, just for it's for you guys. So, what do you see here? And shout out to Day. He was here to call this one live. So, we were saying, are you bullish or bearish here?
Bearish.
All right.
Yeah, bearish, clear as day.
Why? Clear as day now, right?
Yes, always with a higher time frame.
Lows, and now we have a bullish pop above a high. Plus, you have this order block, clear as day, right? As you said. So, if you're still in doubt, zoom out even more. Go to the monthly. What does the monthly say now? Up here. Bullish or bearish?
Bear.
The monthly candles are data ranges.
I wouldn't trade this.
Then you'd be wrong. Because it's digging into a monthly FVG, right? And a weekly order block while pushing above a high. And as we said, the rules of the market profiles are when there's a bullish pop above a high, you go and validate the bullish pop with a higher time frame PDRA, and you smack it back down, right? So you have the higher monthly, bearish.
And
So
this,
if you wouldn't trade this, you don't. It's because you don't understand price in this situation, right? Who was that? Who said you wouldn't trade it? Who's it?
FX21.
Nah, come on, man. You should have traded that because it's a clear bearish order flow, right? This order block is broken, right? Let's probe order flow. Let's go and probe the order flow. Order block broken, right? FVG, this FVG over here. This little, show an imbalance over there, right? It's a fairly small one, but still. Order block broken, FVG broken. Plus on the weekly, it's a clear as day. Clear as day, pun intended. clear as day. Downtrend and a market maker sell model. Yes or no? Now look at when I'm employing the market maker sell model. When the logic is right. Right? Is this not UFX21? Is this not a market maker sell model? You tell me. Right?
Yep.
So the market maker sell model is the draw on liquidity. So when you ask about draw on liquidity, the market maker model is a draw on liquidity. It tells you what to do, right? So we're breaking through bullish PD arrays and we're respecting bearish PD arrays. Yes or no? This FVG, IFN over here, right? We're respecting bearish PD arrays. Why would you not trade it? And we have a bullish we have a bullish pop above a high in a downtrending market. So why would you not trade it?
I'm not saying you're wrong. I'm saying if I was looking at this by myself, yeah.
But I'm saying you're wrong. Because if order flow is bearish, then why aren't you selling? Right? You tell me, am I wrong? If order flow is bearish, then why are you not selling?
If I was looking at this by myself, it would be in the middle of a range, and I would be afraid to trade it. And that's
very
just
good. That is an excellent point you brought up about ranges, but which I agree with, by the way, right? Range trading, which is the next after the trending markets, the ranging markets. Range trading, you never trade in the middle of the range, right? But, however, tell me the reason, by the way. Tell me why don't you trade in the middle of the range? FX21.
It's neutral.
No, why don't you trade in the middle of the range? What are you afraid of?
I'm just not sure.
All right. Any other reason?
That's it.
Because you expect chop, right? In the middle of the range?
Right. And whenever I see he talk about middle of the range, I think that he usually don't do anything. Wait for more information.
For me, the monthly and weekly, right? They're all more than enough. And if you look at the power of 3 candle on the yearly chart as well, right? There's accumulation, Q1, manipulation, and distribution, right? January, February, March, April, right? Started the topping process towards the beginning of April. Then it just tanked, right? Plus the market maker sell model, plus the range high. Talk about ranges, right? What's the target after we purge a range high? FX21.
Internal range liquidity.
And
middle of the range.
The other end of the range, right?
Original consolidation.
I'm sorry.
No. Basic range trading. And you can go back to this, right? When you have a range, which is the next topic, but you pushed me into it, so whatever. When you have a range, which is my bread and butter, right? So when you said range, you caught my attention, right? You have a range and you purge either end of the range. Then what happens? Generating interest, right? Generating interest up and down. So there's liquidity building up and below, correct?
Correct.
Yeah. Building. So when you have this liquidity building up and below, and you purge the range low, then all this liquidity you've built during this while is still built up there, right? So the logical target is going to be the range high. So whenever a range low is purged, I have 2 targets, right? And I've dissected ranges to no end. Target 1 is the high that caused the purge. Talk about targets, right? And so it's going to be something over here, right? Somewhere over here on the lower time frame. Move this shit. Target 2 is 50% of the price leg of the range, and target 3 is the range high always. So when you see a range low being purged, and the range high has not been purged, then you can reasonably anticipate target 1 50%, target 2 range high, right?
Correct.
So based on that logic, right now, right here, purged. Right? I'll show you the logic right now in a live call I made. So you know it's not some hindsight garbage, right? Range high, purged, target 1, the low that caused the purge. This is a high quality target, right? There's an extremely high chance that it hits the target. And target 2 is the 50%, so 2 before 1. And target 3 is the range low. So I'm finding, when I see a range, a clear defined range like this, right? I'm waiting for one end. Have you seen my turtle soup, by the way? Which I call on Twitter. Have you seen the ranges I call on Twitter?
For this one?
No. Have you seen the ranges I call on Twitter in general?
I'm not sure which one you're referring to.
So you haven't.
I haven't gone through all of your tweets, to be honest.
All right. I might forward it right now if I find it real quick.
Thank you very much. Thank you very much.
When there's a clear defined range, right? What does that mean? A swing high, swing low, and it's mid range, right? Then I'm waiting for one end of the range to be purged, and then I have a trade ready, right? As soon as you purge the range, I have a trade. That's a system. That's a model for you. That's my bread and butter model, right? Which is range, wait for a purge of one side, and then you have two targets. Target 1, 50%. Target 1, the low that caused the low or high that caused the purge. Target 2 is 50%, and target 3 is the opposing end of the range, based on the logic that the liquidity was built: accumulation, manipulation, distribution. Right? That's what it is. What's a range? A range is accumulation, manipulation, distribution. Right? So we have accumulation here. Accumulation, right? So what are you waiting for now? Over here. Either end to be purged, right? For a trade to form. Accumulation. Now a trade idea has formed. It's presenting itself to us, right?
So at this point, you already know that you're about to enter a trade, right?
I know that I'm going to enter a trade targeting 50 and 1. I'll show you a live call, right? A live example.
Gotcha.
Right now, right? That's what I'm doing. At this point, as you can see, accumulation, manipulation. I'm expecting distribution 1 and 2, right? You blend that with a higher time frame PD raise. You blend that with time. You blend that with market profiles, and you get a pretty clean read, right? I'll show you right now. Another example. Let's finish with this one first. Right? Accumulation, manipulation, and then distribution. I'm in the trade, right? 1 done, right? And then, of course, we expect the 50% to be a chop fest, right?
Correct.
And then, of course, a bullish pop above a high in a downtrend. You see how I'm blending market profiles with it? Is to be smacked back down. And
hey, Romeo, your cursor is lagging a little bit, so it's hard to see where you're pointing at.
How about now? You see now?
I don't see your cursor right now. Am I tripping?
Do you see the screen?
Yeah.
I don't see the cursor either.
Do you see Bitcoin on the range low?
Lag.
Do you see the Bitcoin? Yeah. Do you see Bitcoin at range low?
Yes.
That's all that matters, right? Is you know that accumulation, manipulation, distribution. This is a classic range play, right? So price is always in a range, trend, consolidation, expansion. Let's lock this shit once. Lock. Consolidation. Consolidation, expansion, consolidation, expansion, consolidation, small candles, consolidation, expansion, consolidation, and expansion. Always, right? So consolidation, turtle soup, expansion. Power of three. Consolidation, turtle soup, expansion. That's how I see it. Consolidation, turtle soup, expansion. Validating it with market profiles and validating it with higher time for PD arrays, right? So,
Hey, is this stream laggy for any of you guys?
No,
it's
it's
fine.
No,
It's
it will
your
be
problem,
fine
I
on the
think.
recording. It will be fine on the recording. It's not lagging on my part.
Gotcha.
Your connection, my friend. So,
But in this case, for the high of Bitcoin, there was no higher time frame PD rate, was there?
the higher time frame PD array is the liquidity pool of the past 6 months. See, when I say PD array, right? Go through the PD array, the matrix, the hierarchy. Find old highs, old lows. Yes or no?
Yes.
That's correct.
Exactly. So old highs and lows, right? That's the way I view the market. Highs and lows, market profiles, and higher time frame PD arrays. That's the combo, right? So, that's pretty much this. This was a beautiful range trade, right? This one as well, right? Check this out. A range within a range. Range high, range low. Yes or no? Range high, range low. When you think in the range and the profile, then this is not a shift anymore in your eyes, right? You're in fact bearish up here. You see how the logic changes, the way you think, right? So think in profiles and ranges, right now.
Romeo, but what if, say, like when you were watching the market in November, at that point in time, price was still extremely bullish, right?
What?
In November, when we saw price, wasn't the order flow still extremely bullish? So
no, because order flow changes, my friend, right? Order flow switches at certain points in time and at certain liquidity pools and at certain standard deviations, right? It flips from bullish to bearish or vice versa, right? So it can only be bullish until it's not, right? How to measure that? You have a bunch of tools. One of them is a range high. A range high is... Let's write down the rules of range trading. Most of them. Again, buy low, sell high, right? Goes without saying. Buy low, sell high. So buy range low and sell range high, correct? Or if you're not sure, then never buy range high and never sell range low. With exceptions, because when you do this, you're being a breakout trader, right? The only time you can be a breakout trader is when they create a PD array at the range high or low. Write that down, right? The only breakout trade you're allowed to do is when they create a PD array at the high or the low, like this one, right? Range high, range low, right? Apply the rules right now. What happened over here? Accumulation, manipulation, distribution. They gave you a PD array at the high of the range. That's a real breakout. You don't buy the range high. You wait for the retest, right? Is my voice and video clear?
Yes.
Yes.
Right.
Yes, both are clear, mate.
So I hope that answered your question, my friend. More rules of range trading. Never deal with price in the 50% of the range. Right? Another one. When we take never long after a false breakout, never long after, this is for Zlatan, You remember? You asked me? Here's the answer. Never long after a false breakout for range, and never short after a false breakdown for range. Because more likely than not, we have changed, we have shifted, whatever you want to call it. We're now trending from bullish to bearish or vice versa, right? Excuse me. So, and of course, the 50% is a very sensitive area. It can be used as support and resistance. There's some other rules, right? Some more deep details. But as an introduction to range trading, this is an excellent one, right? And as I mentioned, those of you who took notes, remember that I said we expect a stop run when? Where? At what? Right? No. We expect
At
a stop run for
range.
Exactly. And look what happened over here. Exactly at 50%. I'll show you more examples right now, right? But exactly at the 50% of the range, you get a stop run, and it tanks, right? So,
like I still don't see how you could have trusted shorting right at the high of November, though.
That is why I gave away this. First of all, it's tape reading, right? Because every stop run happens within a deviation. That's how you catch daily highs and lows, right? CBDR. What is CBDR? It's you trying to predict the high or low, right? What is London high of the day? What are you doing? What is London low of the day? You're trying to catch the high and low, not randomly, not just shorting anything, not just coming here. For example, a mistake you might make at the beginning is shorting this high, right? Why is that incorrect? Why is it incorrect to short this high? That's a quiz. Tell me. Turtle soup, right?
Because like in the range, you'd say it's at 50% or kind of in a premium.
And we're breaking highs and rejecting lows. That's the key point. So when we're breaking, and what you did was a mistake, my friend. You mistook a ranging market for a trending market. And that is the biggest challenge, write this down. The biggest challenge as a turtle soup trader is differentiating between ranging markets and trending markets. The only two things that can help you are a higher time frame PDRA and chart time with the concept, right? You follow? And again, a depiction of the market maker of the shift. You remember I said a real breakout doesn't allow you to enter over here, right? Shift in structure, break, bearish here, below low, retest, and then continuation, just a side piece. Anyway, we were saying that you trust the high using a higher time frame PDRA, using time. That is a key element, which sadly I won't be going through this one, right? Using time, using a higher time frame PDRA, and using deviations, right? And chart time. Those are three main things which will help you differentiate, and of course, it goes without saying, the market profiles, right? Those are four main things. Write them down. Be more arranged.
But in a daily time frame, where would you measure the deviation from?
Previous ranges. I'll let you figure out that one. Because time and price are fractal, right? So the same thing you do with an Asian range or a flout or CBDR or whatever, right? You do it on the higher time frames. So the way you trust, here's another one. The way you trust a turtle soup is higher time frame PDRA. Market profiles, this is crucial. Market profiles, time, and chart time. Time as in the axis, and chart time as in tape reading. So we have reached the limit, but I'm gonna keep going anyway because there's still some stuff left, including the entry. So for the guy who was asking, what's your name, by the way? Who are you?
Hopium.
Hopium. All right, Hopium. That's why I said we have 3 entries, remember? Before yesterday. As turtle soup traders, we have 3 entries. Number 1, turtle soup. Number 2, order block FVG. Number 3, OTE/breaker. And I hope someone's recording the whole thing. Does someone have the whole thing? Let me go check. Does somebody have the whole thing?
Yes.
The whole thing, huh?
Yes.
Yep.
Well, not the
5 hours
beginning,
and
like the first
20
hour
minutes.
that the bonus.
The first 3 hours was a bonus, right?
I don't have the bonus.
All right, it was irrelevant. All right, so I have 2 people confirming that they have Lars and Rip. All right, buddy, thank you. So
Romeo, when you said you wouldn't be going over time, is it only in this lecture or you won't be talking about it?
we finish soon, my friend. Time,
No.
again, I will direct you to the videos of ICTs where he talks about it. No, you don't keep his stuff. So you can go to his videos, and I gave you a representation of the open, high, low, and close. That's all you need about time. I believe that everything past that is noise, right? 1, 2, 3 trades per candle. That's all there is. Open, high, low, close, and an OTE in between, right?
Okay. Thank you.
As I said before many times, my Twitter and my YouTube. I might even show you an example right now. So, moving on. Range low, range high, right? Over here as well. Check this out. Let's go to ES. Let's go to something more modern. Right over here. Right in ES. Now be honest and tell me, what do you see? Every one of you sees a market structure shift. Yes or no?
Yeah.
Am I mistaken?
No, you are correct, mate.
I mean, by definition, by the pattern's definition, it is a market structure shift. Yes or no? So, how would you filter out the fuckery that happened later on? Why did this happen? Why did this?
I actually remember this.
Why did this
during the 2022 mentorship?
Why did this market structure shift fail? I remember too. Why did it fail?
The only thing Michael said was because we had a swing high form above the equal highs at the left in May.
Very good.
And a seasonal tendency.
The swing high is the closest. Is one of the earliest indications of a top or bottom forming, right? A swing high is the closest indication of a top or bottom forming for a specific reason, which you can go figure out by yourself. So, why did this happen? What's rule number 1? What's rule number 1?
Don't buy highs.
Buy low, sell high. Buy low, sell high. buy above highs. No, definitely not that. Buy below lows, sell above highs, right? And don't buy above highs and don't sell below lows. So keeping this in mind, what would you be doing right now?
You shouldn't be buying.
Like live the moment. This is price right now in front of you. What would you be doing to price? You shouldn't be buying. That's one answer, right? And
we will look to sell.
Or not buy it. So the rule, if it doesn't save you, if it doesn't make you money, it saves you money. That is crucial, right? To know when to be neutral or to know when to not be something, right? Now look at this market structure shift. But before we dissect it and see why it happened, right? See maybe one more example of the concept. We've seen a bunch of examples. How do you measure high and low?
20-day if the rate. 20, 40, 60-day the range.
Right. High or low? 20. Count back. 20, 40, 60. Are we high or low?
High.
Visual. You can tell straight away, right? if you want to really be picky, as some of you probably are, because in 1,000 people, for certain, there's going to be 1 or 2 picky people. There are 60. Pretty high. Yeah, you're definitely not low. So that's measurement number 1. Measurement number 2, the dealing range. Are we high or low? It's actually an OTE, right? Are we high or low?
We're high.
All right. So 2 boxes ticked. And the expansion leg, the swing low that we're rallying from, the bottom that we're visually rallying from, high, right? As I said before, the first 2 are what matter more to me, right? The third one is just a bonus, just a rough look. I don't even know why I'm mentioning it, but it's there. Third wheeling. So this alone with those measurements allows you to put a sell, right? Or not buy. So if it doesn't make you money, it saves you money. Now, blend this with this market structure shift happening at open the weekly, excuse me. What do you see on the weekly?
A SIBI that was almost traded to previously.
There you go. All right. A higher time frame PDRA is more important than a lower time frame market structure shift, correct? The concept is constantly happening again and again and again. A higher time frame PDRA is more important than a lower time frame market structure shift. So that is how you invalidate. When I said when you see a shift, validate it with a higher time frame PDRA, right? So you'd be selling there, right? And it would have been a fruitful endeavor. Now, this is also a range, yes or no? Everything blends together, and you don't have to know everything. You have to pick one that resonates with you and make it yours, right? So this is a range right now. Am I wrong? Am I right? There's only one correct answer, right? A range. The first breakout for range is almost always a false one, all right? That's another rule of the ranges, which I didn't mention. The first breakout of a range is almost always the false one, if not always, right? So blend that with buy low, sell high, blend that with the PDRA, blend that with the measurements of how to measure high and low, and you will definitely not be buying up here. You will be selling or not buying. And the beauty is, after we see, excuse me, after we consider rule number 1, we check for a market maker model. Do you see it? So the market maker model is the range low. The first breakout. The range is going to target, what do we say, FX21? There is a stop run that happens at the 50%, correct?
Correct.
What happened here? Stop run, right? Always. There is a, what are the targets of range trading? Target 1.
50% and
the highest, the most likely target is this one, right? The low that caused the purge. That is almost guaranteed, right? You'll always find a trade if you target only this. Target 2 is this. Target 3 is this. Always. All right. So let's apply it. Let's apply profiling markets to a more recent price leg, just to keep up with.
Hi, Romeo. Can I ask a question?
Tell me.
Okay. So can you explain a little bit more on how we want to spot that as a useful range, because there are so many swing highs and lows?
Very good. Excellent question. That is a beautiful question, and I thank you for it. Now, because I was going to leave it to y'all to study and trial and error, which is the best teacher. But you asked, so here you go. What do you see here, by the way? What do you see over here? I'm trying to get to the real live calls, but you're pushing me to show you hindsight. So there you go. What do you see over here?
I see that the high keeps rejecting and breaking the lows.
What? No. Right. At this point in time, what would all of you be doing? The answer is for the mic is with you.
Market session Shiva.
Of course.
Okay.
All right. Any other answers? We have one shift. Any other answers you have?
I would have thought since the market rejected the previous high, it was going to continue lower.
No, forget about me, and forget about what you learned today. In general, what are you thinking? When
this is what I would have thought.
Yeah, it's bearish.
Exactly, and you'd get wrecked. And just to rub it in, the market would use your stop loss, which would be here, as a support level, right? So that is not a correct way to think. Now, instead of thinking in market structure shifts, first of all, what's rule number 1?
Buy low, sell high.
Are we low or high? What are the measurements of high and low?
It's low, I think 20 days low.
68 candles on the weekly. 1, 2, 3, 4, 5, 6, 7, and 8. Right? So we're low. Dealing range, we're below the dealing range. Right? This was if we were bullish, we'd have an OTE over here to continue, right? We broke through. Took out a liquidity pool. What's the rules of trading highs and lows? Never sell below a low, right? And never buy above a high. And you can see here why. That rhymes, my mistake, right? Yes or no? So rule number 1 would save you from being bearish down here, right? Now, how do you validate or invalidate a market structure shift?
Time frame.
Who was the person who said he's going to sell this bearish shift? One of you. Was it FX21?
FX21, yeah. I said it looks bearish.
All right, excellent. It looks bearish. Now, confirm, think of it as a confirmation process, right? Confirm the shift with the higher time frame. So look at the monthly right now and tell me, do you still think it looks bearish? Right down here. Does it look bearish to you right now at this point in time? Is it bearish or bullish?
If I were looking to market by myself, yes.
Bearish or bullish?
Bearish.
This is bearish?
To me, yeah.
Why is it bearish to you? A low above a key level. Month 12, core content, right? A low above a key level. And for those of you who are really interested in turtle soup, watch, in addition to the other episodes I recommended, watch month 12, excuse me. So, you're bearish down here? Really? And why? Give me a logical reason why. Any answer? FX31?
Can you guys hear me?
I can't hear you.
You were muted.
You were muted.
Oh, my bad. Was that question for me or everyone?
It's for you because you said you were bearish.
Right. I said if I was looking at this by myself, I would still be bearish.
Why? Because that's wrong, obviously, right?
Right.
Why?
I mean, it is wrong. Yeah.
Why is it wrong? That's the question.
Could I help?
Yeah. I don't have an answer for that, to be honest.
I would have seen like the bullish order block being broken and monthly BISIs being broken, and also recent bearish order blocks being respected.
So you're bearish right now, right?
So I would have been bearish.
So what's your condition to be bullish then?
If bullish PD arrays are being respected.
Okay, so we're at one right now. So what's your confirmation? Do you just watch? There's a more detailed surprise than simply PD arrays, right? There's market profiles. There is the data ranges, right? Right over here. If you look back 20, 40, 60, right over here, 60 days right there. We are in a discount, a deep discount, right? We're pretty low, and we're below an old low, which is resting above a higher time frame PD array. That is a recipe for turtle soup every single time, right? And trading ranges in general. What's the rule say about this situation? Let's apply the system, right? It's a system. It's not me and you. It's a system says never sell below the low, right? And never be bearish below low. It says buy the low. And you validate the low with the key level below it, right? As a turtle soup low. This is stuff which you'll trust at the beginning, of course, as indoctrinated market structure shift traders is going to be a bit tough, but with more time with the concept, with the model, you will grow to trust it, right? The range low, 50%, always, almost always, right? Is the target.
So in this example, say you entered in October and then it went up, right? And you were in profit, and then you see price come down one more time. Ideally you would have been stopped out at break even, right? But then is the model re-entering at that?
Am I a swing trader? Am I a short-term trader? What am I?
Let's say you're a short-term trader.
Then I look at the weekly profiles, not the daily chart. Okay. Right? As a swing trader, entry, range low, target, this high, and this, of course, this imbalance, and the 50% of the range, right? And I'm going to reach entries and targets and stop losses right now, very soon. Okay. Finally, let's apply market profiles to ES recently, and one last Bitcoin example, and then we're done. Right? It's been a long session. I hope someone's recording the whole thing. Right?
So, Romeo,
Yes,
is that
it's recorded.
can we easily think like if we saw the market structure shift and then at the daily, then you zoom out to see what weekly and monthly says about that?
All right. So
is that the how we should think when we see market structure shift?
the market structure, the shift in market structure is only valid in two situations. All right. With an SMT forming at a key level, right? Or if it happens at a key level by itself, right? It's not a random pattern. Not sure if that's your question, because I can't understand what you're saying right now. But that is what I got.
Yeah, because we keep observing that perfect MSS. So I just thinking like if we see the MSS, then we zoom out. We need to see whether it is in discount, 20 days and so on, to validate that it is fake MSS.
Right, exactly. Like this one. What did I say about fake breakouts? About real breakouts, right? They don't really allow you to participate. Just a candle through the level, right? And a retest. So over here, we're breaking highs and we're rejecting lows. You remember, I did want ES to go down to the consolidation, but I mentioned that a weekly rejection block is a liquidity pool and a potential reversal point, right? So breaking the high. And what's the rule of a trending market for those who are following? One basic rule.
Breaking
yes. And every dump below a low is to be bought, right? Which is what inspired this idea. Blended with what I said before. So while you would see a market structure shift blindly over here, I would see a... it's fucked. Please be fixed. I'm just going to try and fix this. Because if it doesn't, then I can't write. There you go. Gorgeous. So we're breaking highs. So as soon as we dump below a low, what do we expect? We expect a rally. It's that simple, right? And you have your confluence of a higher time frame PD array. Right, so we rejected the low, we broke the high, so I have no reason to expect continuation over here. Broke the high, rejected the low into a higher time frame key level, and boom, right? Final example, Bitcoin. Now, this will be a range example and a summary of Turtle Soup setups. So what's happening here? What do you see? Anyone who's, by the way, is anyone still, if you're still recording, please confirm.
Yes, the recording is still on, 5 hours and 20 minutes.
Full HD?
ZHO, yes. Yes.
Excellent.
Full HD, yes.
Yeah, mine's 7 hours.
So you got the pre-market analysis discussions?
A little bit, not very much.
No, not to worry. For all that are watching, all the topics were discussed, so it's all good.
Yeah. I just hope that the people who watch later don't miss anything, right?
No, they don't.
All right, so right here we have a range, FX21. This is for you, huh? Right here we have a range, correct? a range high, a clear defined range, a swing low, swing high, right? And you will get to know these ranges more by trial and error, right? There's no the closest I can tell you is market profiles, higher time from PD array, and time, right? Accumulation, manipulation, distribution.
Was the previous chart that you were showing me, was that ES? I'm running on fumes here, so I couldn't answer the question.
Yeah, no, it's all good. It was ES. But this is a Bitcoin. So we have a clear defined range, right? So what's the logic of what's happening over here? What is the logic of what's happening over here? It's an open question to anyone.
It's building up liquidity, mostly below.
What?
It's building up liquidity, so we're expecting a breakout on either side, and it will be a false breakout.
On both ends of the
range.
Range. Now we have someone going crazy in the DMs. I'm gonna have to ignore them right now.
The Z1 person, the Z1 trader.
What are you saying?
The Z1, the request for the speaking.
He's saying, why did you delete me? I didn't do anything about what questions 10 times. Why did you delete me? I didn't do anything but try asking questions. Why did you delete me? I didn't do anything but try asking questions 10 times. And then asshole, 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 asshole. So we can ignore that right now. That's not important, right?
Oh my god.
Maybe he just got disconnected and didn't notice.
I know, we can ignore him right now. Let me see if I can. There he is. And you didn't pay to talk, my friend. You paid to take the information, all right? As I mentioned in the group, you paid to get the information. To sit down and get some information. That's all there is to it. So I don't owe you anything. I owe you the information, and I gave you more than 4 hours. I've been here for like 6-7 hours, right? So have some respect. So back to Bitcoin.
Well, I wanted to know, had some questions for the information that you provided.
Exactly. Is that you, Z1?
Yeah.
All right. Anyway, for the questions I've mentioned, that there'll be an FAQ for the most relevant questions. All right. Is that clear?
Yes, very clear, mate.
All right.
It is.
So generating liquidity on both ends of the range, right? Liquidity. So what are the rules of range trading? Again, revision. Rules of range trading. And this is an art in itself. If you try and half-ass a range, you'll get fucked, right? You have to perfect ranges to the point which you can choose the correct range, right? It's ranges are a model by themselves. So if you try and half-ass any model, you'll get fucked. So don't try and half-ass turtle soup. Don't try and half-ass any ICT concept. Don't try and half-ass anything you do, right? In the charts. If you do, you will get wrecked.
When does the range start and end?
Accumulation, manipulation. Is that usually one, by the way?
Yes.
All right. We'll get to that in the FAQ, right? But visually, Z1, when there's a swing low, right, and a swing high, so price does this. It's very characteristic action of a top or bottom, right? So the key level over here, right? So price is rallying, and then it has a swing low and a swing high, and then it goes short of the key level and starts chopping around. That's a range, right? Accumulation, You wait for manipulation and distribution, power of 3, right? From the lens of ranges.
Can I interrupt?
No. Rules of ranges. Rule number 1. I mean, if it's an important question, you can go ahead.
Okay, that's an intermediate high. You're saying.
What do you mean?
You said earlier in your tweets back in the day that intermediate high can be taken like a turtle soup, but it can be run.
Intermediate term highs are also a tool to measure order flow, to probe order flow. All right? Same as order blocks, FPGs, and highs and lows.
Can I provide an example?
Sure.
On UJ the last week, the intermediate high was taken, but not the high of the week. But yeah,
see, a high or low is either rejected or broken. All right? A high or low is either rejected or broken. So which high? Tell me times.
It's the hold on, let me get it on my computer. I'll show you.
All right. Meanwhile, that's kind of a customized question, Z1. So we proceed with the teaching, and we can answer the question later on, right? So rules of creating ranges. What is it? Buy range low, sell range high, right? Don't sell range low. You can sell range lows. Don't sell range low, and don't buy range high. Right? Never play with the 50% of the range. And I can't emphasize this enough. If you can't profile the market, or if you try half-assing profiling the market, then you'll get wrecked. Right? Practice until you get it right. Not on social media, by yourself and your journal. Never play with the 50% of the range. With the 50% of the range. Right, and the targets of a range trade is going to be. What are the targets of range trade? The mic is yours, everyone.
First target 50%.
One by one.
Low that push the range high or low. First target.
Right. Target 1 is, that's kind of a minus answer, but it's okay. Target 1 is the high and low that cause the purge, right? Target 2 is the 50% off the range. Target 3 is the opposing end of the range, correct? Correct. I'm saying correct to myself. So, we're generating interest as market makers above this high and below this low. We go and break one end of the range. Everyone and their mother is bearish down here. But if you think of it, we've been accumulating for 4 months, generating interest. And usually, another rule, my bad, the most important one is the first breakout of a range is usually the false one. Right? Manipulation, accumulation, manipulation. So when you see this, you see a shift, and I see logic. You see shift in structure. I see accumulation, manipulation, generating interest, liquidity pools, right? And time. Gathering stops from here. Target 1 is this. Target 2 is this. Target 3 is this, right? At least. And of course, target 4, which I'll let you figure out, is up here. Was up here from down here. Imagine. So from down here, I'm saying we're going to go to 32K. How? Go figure, right? From this range low, the target and the eye was on these highs. Everyone, of course, became bullish when we broke the structure. But I had my eyes on that level since 16K. Why? Good luck finding out, right? But as a range trade, right? As a range, it's not that difficult.
Can you tell us why?
It's a liquidity. Is that Z1 again?
Yeah.
All right. Liquidity pools, my friend. Go and watch month 5. The answer is there, right? So gather the liquidity from down here and distribute it to here and here. And of course, as expected, nothing out of the ordinary. Nothing out of the ordinary. Now, everyone would be selling this as a FPG, yes or no? You guys?
Most everyone.
Yes. Without
Except
a doubt.
those who trade logic and narrative, not patterns. Logic is saying we've been accumulating and generating interest on both ends. The first breakout is usually false, right? So I was not bearish at here, not even one. I was trying to be bearish. Right? I'm seeing everyone saying 10K. I'm trying to reason with them, but it's not how price moves. Again, it goes back to intuition, right? It's not how price moves. It can't continue downwards. Range low. All that happened was nothing out of the ordinary, as expected, right? And there you go. So this is classic range trading, which is my bread and butter, right? And here's a little, check this out. Go to the monthly. We said stop runs happen at what level? Stop runs, they happen at the
3%.
Equilibrium.
Exactly. Stop runs for what? For continuation, correct? So let's look at the monthly expansion leg. Again, notice most of the work I'm doing is on the higher time frame, because that's the key. That allows you to enter on the lower time frame. So you have this parallel channel, probably something you haven't seen before. Now, where did the stop run happen? 50%, right? So we had a fake bottom, a false bottom. The same logic I showed you in the beginning in a drawing, and then Z1 told me to show him the chart, and I did, and it's here again, right? Fake bottom, false breakout at 50% in the monthly FVG. That in itself is a model, a turtle soup at 50%, right? Turtle soup, 50% continuation. So that was a reason why, well, one of the many reasons, not the only reason, obviously. There is plenty. There's a lot. There's a lot. So the point being, range, right? Clear defined range right here, right? Look at this. This is a classic range. I just chopping around with a clear high and with an obvious high and a high over here and an obvious low. Generating liquidity on both ends. Transferring liquidity using the range rules from range low to range high. Right? Range low. Chop around. Again, rejection of this low. Why is this rejection? Because rejection is the refusal to expand above a high or below a low. Rejection is the refusal to expand above a high or below a low. And comes standard. That's simply how the markets book liquidity pools, right? Transferring liquidity pools from one end of the range to another, from high to low, to high to low, to low to high to low, etc.
So you wouldn't consider the downfall from that range, right?
What do you mean?
From where you considered the first of all the consolidation from, was it January 1st in the middle of January?
Can you rephrase the question? It's not clear.
You want to consider that downfall from where there's like two big
this you mean
candles.
Right? This
to the left.
This
left.
This
left. Keep going.
This
keep going.
This
yeah. You want to consider that and the one on above it as a range, right? Yeah.
It is a range. It is a range. Yeah. Some ranges are more valid than the others.
So you would say it's broken.
Broken what?
It's a broken range. Like it.
Why? You mean this, right? This is a broken range. This.
Well, further down, yeah. Okay, yeah.
You mean this over here?
Right. Yeah. Yeah.
All right. With your logic, although I don't draw a range this way, you can consider it, and it is on its way to 32,000, right? That's the drawn liquidity for Bitcoin. Is these highs over here? These two?
Right.
Tell me.
Well, before that is a range, but before that, there is a higher range, so that is a broken range.
That is correct. And that range was broken, truly, because ranges can be falsely broken or truly broken, right?
Right.
So,
so right now,
and how do you differentiate between a false breakout and a true breakout? This is crucial because these are mistakes which you'll make, right? Range trading, if you choose to use it as your model, these are mistakes. That's a smart question, right? If only you didn't call me an asshole, right? That'd be nicer.
I'm sorry.
No, it's all good. But mistakes you'll make during trading ranges is simply market profiles, right? So over here, the profile is bearish, right? Rejecting highs, breaking lows. Yes. So this should be no different. Breaking. As soon as we start rejecting highs and lows at the same time, we're ranging. Write that down, right? As soon as we reject highs and break lows at the same time, we are ranging. Right? Here's a visual. As soon as we reject highs and break lows, as happened in this range, right? Rejecting highs and lows. Yes or no? That is a range. So I will make some YouTube videos, I think, to solidify the concept in your heads, because you'll have the inner workings of the concept, right? And you can watch them and practice with them. But this is the main idea, right? Accumulation, a logic accumulation, interest up and below. Because every 3 months, every 3 or 4 months, there's a shift, a quarterly shift. And the purpose of the quarterly shift is, it's not random. It's to provoke and invoke sentiment change. This is what happened here. That's what I was thinking as we dug below this range low at the time, right? And of course, the callers on Twitter. I'm not going to be tagging this one, but this range low, this turtle soup right here. This is turtle soup, right? I'm saying range this, range that. Turtle soup, right? Range low. Boom. Call on Twitter right here. Right. And again, another turtle soup down here also. And this turtle soup from this range high to the mid range, we said that the stop runs occur at 50%, right? 50% of the range is the stop run zone. So we have one stop run here. Boom, false breakout. And that is also a reason why I anticipated the stop run right here. 50%, stop run, continuation. That in itself is a model. So that is pretty much all there is to ranges. There is a bit more. There's always more. There's always more. It's never enough, right? There's always something slipping in the mind, which comes out when you ask questions. Right? It's hidden in the back of my head. So you'll never get 100%. It's not possible unless you've seen and traded as many ranges as I have. Right? And good luck with that.
Hey Romeo, so that range that you're using what time frame is that? Because it seems like it's like a 2-day that you're using. Is that like a monthly range or weekly?
1 day, huh? Take, be happy. How's that? 1 day. It's a ranging. It's a market profile range, right? Ranging profile. Simply visually, only price wise, with no time involved, right?
So you drew that out before it took the low, right?
Of course, it's like this. See, if you've been following on Twitter, any of you, then you've seen me call ranges, right? I'll post some. Let me see if I can post what it looks like before and after, right? Eyeing it. Open the group chat, all of you.
Yeah.
This is what it looks like before and after, right? When you're live, and a bonus, I'm going to show it to you on a 1 minute time frame. Now, my lower time frame findings, I probably won't be teaching them to anyone, right? But here is a 1 minute range which I traded. Here, take the method. This is step 1, right? On Twitter. And then you have 2. Right?
So you're just watching like which side it would take, right?
Nah. If you think like that, you're gonna get wrecked. There's always an element of time involved, a higher time frame PDRA, and market profiles.
That's wrong.
Right? It's those things. Market profiles, a higher time frame PDRA, and time. Here's another one. On NASDAQ. This is recent, so it's kind of cool to see. That was a 1 minute, some noise on lower time frame. You have this, right? Now, range trading.
Sorry, is it just frozen for me, or are you guys seeing it?
Buying it. And what happened from there?
He's on his phone posting in the group photos. That's why the mouse isn't moving.
Oh, okay.
Yep, that's right. Thanks for understanding. And then you have this, right? So you see? Bread and butter. Bread and butter. Mine, at least. Now, this is... Let me check. See if I can write some other ones, too. Again, you have, on the lower time frame, 1 minute, which I engage in sometimes myself, right? These are all on Twitter for you to go back and look at. Range low. Check this out before you ask a question. Right? Range low to range high. Right? Range low, range high. Right? I'm not sure how that ended, of course, but just popped up.
Yeah, I wondered how you did it low time frame, because I always see you do it high time frame.
Lower time frame, same thing, but a bit more precision element with the time of day, but pretty much the same thing, right? Look for times where the daily range is going to cap or the low of the day is going to form, right? Or an OTE as well.
Is this where you use the central bank dealing range?
Here's another 1 minute, right? Always the same thing, right?
Right.
So this is range trading. My bread and butter.
And what time zone what time frame did you draw that first line on your this last photo?
1 minute.
Well, the candle, what time is that?
4 p.m. 4 p.m. 4 p.m.
So are you using intervals of like 2 a.m., 4 a.m., 2 p.m.?
You can use a bunch of stuff. See, I'll give you some. The same thing which I say on Twitter, which is I look for 3 turtle soups a day at least, right? One at 3 to 5 for the daily range. Now that you asked, 3 to 5, 1:30, and 4 p.m. Right? If I get it, good. If I don't get it, then wait. But the confluence has to be the market structure, aka profile, right? The higher time frame PDRA, and the time of day. So
There just can't be some like you can't just pull it out of your ass and shit.
if you try and put, I'll show you what happens if you fuck up a range, just to scare you off, all of you.
Yeah, do it.
If you try and trade a range without profiling the market, you can end up like this and say, fuck Romeo, fucking scammer. Look at this. This, right? Range low, fuck, wrecked. Right? Why? Because the market is predisposed to go down. It's breaking lows and rejecting highs. Any bullish pop above a high in a downtrend is to be smacked back down, right? What is this?
Did you share? I don't think you shared it.
Did you what?
I don't think you shared it to the chat.
Oh, it's on the.
Can you see
on
the
Telegram?
Can you see the screen? Bitcoin?
Oh, my bad.
It's in the live stream, yes.
All right, so bullish pop, smack down. Bullish pop, smack down. Right? Downtrend. Bearish order flow. Bullish pop, smack. They probe the order flow with order blocks, right? I probe them with highs and lows, right? Bullish order flow, bullish pop above a high, smack down. That's how you probe the market profile. So you don't just blindly do this. When you see it rejecting both the low and the high, that's a range, right? Rejecting lows over here and rejecting highs as well at the same time. That's a range. And the opposite is over here, right? Over here you have the turtle soup rejecting lows and breaking highs. Rejecting lows over here, turtle soup, turtle soup, turtle soup over here. You see this? Final turtle soup. So this is how turtle soup works, right? And how to choose the correct range with a higher time frame key level supporting you. So, in summary of turtle soups and what type of shapes they come in, I've posted a tweet before. Turtle soups. God damn, that's a lot of hours. But whatever, who cares? The important thing is the information gets to you and you leak it, as some of you are going to do. Turtle soups. They come in three shapes. One, a continuation, right, of the trend market profile. Two, a range. So there's always an opportunity somewhere, right? A range. And three, a reversal. Horrible three. Three is a reversal. Disgusting here, right? Continuation, range, reversal. Example, what kind of turtle soup is this? Mic is open to everyone.
That is a
continuation.
That is a discount. Yeah. Oh, whatever.
Whatever. Continuation.
I was gonna say it was a premium discount.
No. I'm talking about the kinds of turtle soups, right? It's a continuation turtle soup, which goes like this, right? Uptrend, turtle soup, uptrend, turtle soup, uptrend. This is the key, the types. Study this very hard, right?
Okay.
Tape read it. Ranging turtle soups, range low, range high, and reversal turtle soups at a higher time repeat array, right? All these have in common a higher time frame PD array or a key level. At this point, I don't even care anymore about the handwriting. So continuation, right? Continuation, continuation. And then what is this kind of turtle soup right here?
Reversal.
Very good. Excellent. Add a key level, a previous 6-month high, right? It's always perfect. You have to be in sync. That's the thing. So what kind of turtle soup are these?
Continuation,
right? Continuation. So
Romeo.
Consolidation, turtle soup expansion. consolidation, turtle soup expansion, consolidation, turtle soup expansion, continuation, turtle soups. And this final turtle soup, what is this one? What is this one?
Rejection.
Reversal.
Range.
A reversal / range, right? But this one is a clear, obvious range. So I would classify this one as a range turtle soup. Now, the thing is, all of these are ranges. Range, yes or no? Range high, range low. Range high, range low. Range high, range low. Range high, range low. Kind of fucked up range over there. Range high, range low. Right, range high, range low. All of these are ranges. Go back to this. Go see what it gives you. There's always trend range, trend range, trend range, trend range. Consolidation, turtle soup expansion. Consolidation, turtle soup expansion. Consolidation, turtle soup expansion. Reversal, right? And then consolidation, turtle soup expansion. Consolidation, turtle soup expansion. Consolidation, turtle soup, my entry, expansion. Right? Consolidation.
What you're talking about right now is core content, right?
Turtle soup expansion. I don't know where it is, but see when he speaks about this, I don't know. I don't think I haven't heard him mention. He's mentioned the states of the market. Obviously, consolidation, reversal.
Market, yeah.
Exactly, but this is different. This is the market is always in consolidation or expansion, one of the two, right? Consolidation, expansion, consolidation, and so on, right? So the point is not to memorize, but to realize the kinds of turtle soups that happen, right? I'll show you one on the lower time frame, just for niceness sake.
I have a question.
Tell me before I go. What's up?
Around BTC, around that 32,000-34,000 range.
Right.
In order for you to confirm a turtle soup, what would you want to see in that area? Because in this case, it's a consolidation, manipulation, and expansion on the downside. But in order for you to say that it's a turtle soup, what would you have seen on the downside? Because it took out the significant low, 6 months low on the left-hand side.
You mean very good. So you're talking about this one here, right? This one here, right? This one?
Yeah. It took out the significant. Yeah.
You're asking why did the range low not give a bounce?
Yeah.
All right. A range is either broken or turtle souped, right? That's how you know. It's either truly broken or falsely broken. So you have to be aware of that when you're trying to trade a range. When you reach an extremity of a range, then you can expect it to be either broken falsely or truly. How do you differentiate? Chart time, PD array, and the reaction and the market profiles, right?
The reason why I got this question is, it looks like the same like we saw around the 69 area. It took out the significant high, and again it manipulated the high.
And here's one more thing. Ranges don't range forever. That's an important thing, a mistake you'll make. You expect this to range forever, right? This is a distributive top. This is a distribution top, right? So they accumulate for all these years, on years, or a couple of months, right? Almost a year. They're gathering positions, humongous positions, right? Creating a distributive top, right? Which I'll talk about later on. Not. There's no time for it right now. Distributing and accumulating, manipulating. All the positions are fucked up here. They load the bags, and boom, right? So at some point, a range is going to break, my friend. That's for you to find out using market profiles, a higher time frame PD array, in this case, a breaker, by the way, right? If you look at the higher time frame, the weekly, it always goes back and circles back to a higher time frame key level. Always. Right? A breaker FVG. Yes or no? We're closing below the body. That's not a good sign, is it? Right here. Right?
Yeah.
When in doubt, zoom out.
Thanks for the clarification.
Hey, Romeo, I know, do you have time for one example?
Of what?
Like you said, like back in your tweets back in the day, you said intermediate highs can't be turtle soup, but they can be taken.
They can be turtle souped, but they can't be broken if you're bullish. Here's an example right here. What is this high right here? That rebalanced the FVG. Intermediate term high, right?
Yeah.
What happened to a turtle soup? That's the concept.
Can I show you an example on
Show
the
me.
currency pair?
Yes, but not now. When we're done, then we'll see the FAQs, right? I'll make sure to check yours later on, right? Because that's an individual question in a group setting, so it's not fair, right?
Yeah. All right.
So, finally, the entry technique. But the time's up, so you'll get it. You'll get the entry technique. How long has the game has been, by the way? 10, 11, 1, 2...
6 hours on the official lecture.
Gorgeous. Plus the 3 hours before, right?
Yes,
That would
yes.
go for 9 hours straight. And I can go for
Negative.
9
You're trying to get us divorced.
Hey, I gave you double the time, huh? It was 4 hours, and I still haven't gone through half the content. So whatever.
Yeah.
I'll give you the summary. Right, the summary is what you've seen. It's a 9 hour summary, but if you read between the lines, then you'll notice what I'm talking about. Right? It's not hidden. It's not being hidden on purpose. It's right there. The 3 types of turtle soups is what I'm looking for all the time. That's a summary. All right, three kinds of turtle soup. Continuation turtle soups, within the correct market profile, reversal turtle soups, and they're all connected, by the way. Reversal turtle souped, and finally, arranging turtle soup, which happens all the time in between trend range, trend range, trend range, right? Now, I will show you one example for the entry technique because we're running out of time. I wish I could show more, but there's it's all over my Twitter anyway. But for the sake of the 4 hours, which became 9 hours, you can have an example. If you remember the low of the week that I called the week before this week. So the low of the week, not this week, previous week, on ES. The entry technique, you have 5 entry techniques, all right? You have 1, you have 2, you have 3, so you go to the area to be souped, where you suspect a soup to happen, right? You go over here, you go to the 4 hour. So you have a key level already, right? You have a weekly FVG. You have a range over here, range high, range low. Yes or no? Range high, range low. Right over here. Did it expand above the range high? Right over here. Did the price expand above the range high?
No.
What did it do above the range high?
Reversed.
No.
Consolidated.
Go straight up
Accumulation.
You were saying?
It consolidated.
Exactly. And what do we think when we see consolidation above a high?
They're loading up their bag.
Exactly. Right. If they had the bag ready for a long, they'd be up already, like this one. Look at this high. Full. They gave you a PDRA at the high, right? And they went. The location of the PDRA is important. So, range high, range low. Let me show you a picture, which you had seen the previous week and probably didn't make sense to you, but now it'll make a bit more sense. Right? Select two items, forward, right here. Right? Range high, range low. Yes, the same exact chart over here in front of you. Now, when did I find the entry? That's a question, isn't it? And how can you enter?
Personally, I would enter at the first spike.
You have 5 different entry techniques. 5 different entry techniques. 1, 2, and 3. Right? So entry technique number 1, a higher time frame PDRA entry with a higher time frame PDRA loss or stop loss. Sit forward, all of you. Sit forward and pay attention more now, huh? Second technique is using an intermediate term, high or low to the left, which you trust as a stop loss. Third technique is a lower time frame change in the state of delivery. Right? So basically, we saw order flow. You probe order flow in lower time frame, and you enter. Because if you look at it, there's always a turtle soup somewhere, right? Turtle soup here? Yes or no? Turtle soup, right? Turtle soup here. Turtle soup here. So how can you enter this move? Turtle soup here, right? There's always a turtle soup somewhere in the chart. Turtle soup here, right? There's always a turtle soup, but no one knows how to enter it. Well, these are the 5 different ways in which you can enter a turtle soup. Right over here, turtle soup, turtle soup, turtle soup, all over the place, right? There's soups all over the place. It's simply a matter of selecting the correct ones or the more valid ones. So be picky. You don't see me shorting every single high and low. So you can blindly short the range high, which has a pretty high accuracy rate, by the way, but it has a lower risk to reward, right? That's not fun, is it? It's not good for social media. They have a 1 to 2 or something, right? So 1 to 2 is a good consideration if you are shorting or longing a range high or low using a higher time frame PDRA stop loss, right? And you can go back to this yourself. Entry number 2 is looking for an intermediate term low to trust, as I did over here, right? Blending with time of day, which I won't be talking about right now, right? Only price now. So the range high short was because of this. Go to the 1 hour time frame. Love fast price action. Bunch of gamblers, right? So we have a shift in market structure. Yes or no? Do you see it?
After the last.
Yes. Do you see the valid shift in market structure?
Yes.
All right. So we're breaking highs, and then we start rejecting highs, and we break a low. Market profile, right? If you watch my last video on YouTube, it is exactly this trade, right? With the same logic. Break the low, the rule of the bullish profile is any of the bearish profile is any pop above a high is to be
retrace,
smack back down, right? In a bullish market, you buy below lows. In a bearish market, you sell above highs, right? And this was my entry right here. Stop loss was over here, right? And FVG candle high, and collapse completely, right? That's entry number 2. Entry number 3 is you go up there and look for a 1 minute to change, which I'm not going to go through, right? That's the least favorite. Entry number 4 and 5 belong to me. I'm sorry. So, but these are good enough. These are more than enough.
You stated 4 and 5 on your Twitter.
I didn't.
You didn't. Okay. I thought.
They belong to me, my friend.
Okay.
So, but these are good enough, right? So let's look at the weekly low I called over here, right?
Quick question.
Before we finish, let me just show the example, right? And then you can ask. Just give me 1 minute. Not too long. So, long position. You enter at the FVG itself, right? This is the higher time frame entry with a higher time frame stop loss. Stop loss below the FVG candle, as it does, because stop losses are placed below the PD arrays that you're choosing to trust. And then you have the target as the February highs. As you can see, the risk reward is pretty shitty, which is why it's not my method of choice. But it's doable. It's doable. 1-to-1, not bad. Next up, the one I chose to take down here was you buy below the low, right? Because it's a bullish market. Yes or no? Breaking the highs.
Presumably, yeah.
In a bullish market, it's a continuation turtle soup, right? In a bullish market, we buy below lows. Any dump below low is a buy, right? Bullish market, turtle soup into a higher time frame PD array. This is textbook, right? Textbook. Long below, you can blindly long below the low. Based on what? Based on choosing the correct stop loss. So enter here, stop loss. I put mine over here, right over here, at this intermediate term low. My target was up here. This is a more relaxed entry, and it is more comfortable, basically. It is a lot more comfortable, right? And the final entry, of course, is the lower time frame 1-2 minute entry. Right, you can do that if you want. You can do that if you want, but I don't. I prefer entry 4 and 5, and this one. My favorite are this 4 and 5. You can do whatever you want. I'm not gonna.
Yeah, Romeo.
To one of my ways. Tell me what's up.
For the intermediate term lower high that you trust, does it have to be on the same time frame?
No, that's 3, not 4.
I'm asking you for 4 and 5. I don't want to ruin it for everybody. For yourself.
Is that number 3?
Counting candles.
4 and 5, my friend, will be discussed maybe someday. Maybe
are you saying if I choose a lower time frame intermediate term high to trust, that's not number 3?
That is number 3. Right?
Right.
Intermediate term. So this is exactly to the tick almost. Based on what? Same logic. Breaking highs, turtle soup continuation, right? Turtle soup continuation trade based on the same logic I'm telling you. The second one is an intermediate term high or low to trust. Third one is a 1 minute shift in market structure, the correct way, not the memorized parrot way, right?
Oh no, but for the intermediate term high or low, what time frame do you have to use?
It's fractal.
The time of entry, like right now, this is what I did literally. Let me show you. Let me see if I can find the screenshots of the before and after.
Like, could you have used a 1 hour intermediate term low to trust? Or a 15 minute?
Again, this one's gonna go down to you and your experience, right? In my experience, what I trust personally, because you can't trust except something you've seen a bunch of times, right? Even people, right? You trust things you're familiar with. So a concept, when it's new to you, it's foreign to you, you don't trust it. You have to try it, fail, try, fail, try, fail. You'll know exactly which one. You'll know why I didn't choose this one, for example, and this one instead, right? That's the question. Why didn't I choose this one? This one instead. That comes to you and your own chart time and the way you see it, right? But generally speaking, an intermediate term low should hold or be turtle souped, right? So if you're really conservative, you can go down here. You can go down there. What day was this? This was on the Wednesday, the 26th. Let me see if I have a screenshot of the entry at the time of the entry with the stop loss placement. If I don't, then unlucky.
Wouldn't that be a breaker?
What's a breaker?
To where that wick is.
This?
To the left.
This?
Yeah.
Maybe. I prefer breakers to be a thick, bulky green candle before a downwards purge, right? Or vice versa. I'm saying random candles. That's just me.
Yeah.
Hey, Romeo, could you show us some examples on the 5 minutes like you do on your YouTube videos?
A 5 minute what? Entry?
Yeah, like this is all on higher time frame. Like most of us here would be on scalping.
If you don't know how to deal with higher time frame, then you have no business going to the lower time frames, right? You just don't. If you're not confident in your higher time frame analysis, then you shouldn't be playing around with the lower time frames.
No, I'm asking the concepts that you thought right now. We could use this for precise entries on the lower time frames, right?
Of course, it's all fractal. Everything is fractal. The market profile is fractal. The higher time frame relative to the current time frame is fractal. Everything's fractal. Fractal. Right?
Hey Romeo, before you go, can we go back to the question that I had about UJ?
Let me see if there's anything left. 1 second. Let me go and see through the notebook. What's your question?
On the 4 hour.
If it's not turtle soup related, I'll answer to you in the DMs, right? Because I don't want to stray from the main topic. So let's see. USD JPY, right?
Yeah.
All right.
On the 4 hour, if you scroll back to March, you see the high. It looks like it's on the 7th, 7/8. Yeah. All right, so that's a high, and then you have the intermediate high right there to the left.
I shorted this. I remember this.
This
was a reversal turtle soup. Accumulation, manipulation, distribution, leaving equal lows behind. This was my short.
Well,
it was a clean setup. What's the question?
My question is that intermediate high before the fall of that, before that big red candle.
This one.
Yeah.
All right.
So like, my question is, that was an intermediate high. Would that be Turtle Soup? Because coming back to like current time.
Side note. Entry 1, Turtle Soup. Entry 2, FVG/order block. Entry 3, OTE, right here. Retracement. Always. Right? So you have 3 opportunities to enter. So you're saying, should you expect this high to be souped?
No, okay, yeah, I can see where I messed up. Yeah, I didn't see that high. I didn't consider that as a high. Yeah, that's where I messed up.
All right. All good.
Hey, Romeo, one last question. You spoke about the CBDR and the deviations, right? And in the morning, you said that you do apply CBDR to indices. But I have a screenshot of ICT saying that CBDR, the time window that he thought for Forex is not the same for indices.
All right.
So how do we do that? Okay, one sec.
Again, standard deviations, I don't, they're not the be all end all, right? You can consider them, you can use them. But the main focus is not the CBDR, right? It's a reference point of a range expansion. That's the idea, because ranges can be expanded, right? Ranges expand, and when they break out, they have a target. The target is the deviation of the range, all right? So when you break out of any range in general, then the target is going to be an expansion in increments of 0.5 of the same exact range you broke out of, right?
Right. But that deviation level should be in confluence with the higher time frame PDRA, right? That's what he teaches in month 8.
It's always liquidity pools, right? And time. Right. Liquidity pools and time. And then you apply anything else, right?
All right, but you're saying that the CPDR time is the same, which he teaches for Forex.
That's the one I use. I could be wrong, but it works pretty good so far. So if it ain't broke, you're gonna fix it.
On the CBDR, you use
2 p.m. to 8 p.m. Again, these timings are variable, right? Because they're based on his studies of the open, hello, and close, right? So in my opinion, you should you can tailor them to your needs, right? You can literally trade 1 hour candles if you want. So time. I would recommend, especially for those who were just getting into it, at least before you talk about the deeper understandings of time, right? Before you talk about the deeper delvings of time, first of all, master the kill zones, right? And then you can go look for them.
Okay.
Of course. That's what we're here.
Exactly.
What will be the plans for the next week?
Next week is it was 4 hours. I gave you all 9, huh? By the way.
Right.
So
you did. I didn't notice.
Yep. Now you do. So next week is going to be simply an FAQ, and that's it. That's it.
Will you be talking about trade management, like moving your stop losses or taking partials?
That will be in the FAQs, right? That's an important topic. So I'm looking for the FAQs to be. I'm gonna see what you guys think and what you guys are asking, right? I'll collectively answer the question.
Romeo.
In a stream next week, which will last 1 hour, and then our deal ends, my friends. No more Romeo live streams, sadly. You were saying? Tell me.
Romeo, I just want to ask, like you are showing right now that you are sharing your screen right now. I just wondering on how are you marking the range? I mean, I will mark the different range of yours from yours range.
You will mark it different because you're wrong, right? Because you're applying it and trying to get it right from the first time. Now, that's an important part. Thanks for bringing that up. Learning, right? When you come to learning, then expect a lot of error, right? It'll work. It'll be beautiful and works. You'll enjoy the feeling of being right. but expect error. That's number one. Expect horrible handwriting, whatever. Expect error. Second of all, study by yourself and observe by yourself. Don't wait to be spoon-fed and don't wait to be handheld, right? I will correct mistakes, common mistakes, which I've warned about, like the profiling of the market is going to save you a lot of money if you profile correctly. I will correct general mistakes. I don't mind. I do it for free all the time on Twitter, right? As long as you get the concept. But pinpointing small, obvious things which you should be studying by yourself, nope. I'm not going to do that, right? So study by yourself, not on social media. If you have made a mistake, dissect the mistake. It will always make sense, and always go back to time, market profiles, and the higher time frame PD array. If you take away anything from here, it's the higher time frame PD array. So study by yourself and journal and tape read heftily. There's 1,200 people over here, right? Some of them snuck in, so fuck them. They deserve it. Out of the 1,200, I'm not sure how many will be souping turtles properly. Right? Probably not so many. Why? Because they won't.
One of them is Jemery.
One of them is who?
Jemery.
Who's that guy?
That fool from Twitter.
I have no idea. Jemery? Who's Jemery?
Jemery.
Who's that?
I think it's Jeremy.
The fucking guy with that posted a pic.
Jeremy, not Jeremy.
Jeremy.
He's here somewhere.
I mean, if he's white, he didn't confirm payment. So if he's watching, then, you know, fuck you, Jeremy. So, I kind of like him. He's a cool dude. So it's fine. So study, and those of you who tape reads the turtle soups more will perform better, right? If you try and enter with max lot because, you know, Romeo said it, so let me enter it. Nope. Those who tape read the most will learn the most, all right? If you try and apply it and you fuck up and you say, oh, what is this? If you give up early, right, then you deserve the loss and the nothingness which you will rot in forever, right? If you tape read, congratulations. I have a bunch of students, whatever you want to call them, they're souping pretty much like me, right? Almost. Of course, you can't soup like me, but I have some of them who are souping pretty much the same entries, more or less like me. They're simply working hard. That's all they're doing. Tape reading again and again, understanding the higher time frame and the different types of turtle soups. So write that down. So if I have to summarize all of these 9 hours, which is a fucking lot of time, right? Rule number 1. Rule number 1. I'm not going to say it. You know it. When in doubt, zoom out. Profile the market. And identify the type of turtle soup you're looking for. Tape read using this summary, and you will be golden. If you divert, or if you stray from the path, which is the summary, then you will not make it. You will not make it. You are not going to make it.
Romeo, real quick. When we were talking about top of the Bitcoin, and I was saying that I wouldn't trade the 50% of that range that we were talking about. You said you were gonna share something. I forgot what it was.
Which was the stop run. Where do stop runs occur? At the 50%.
No. You said you were gonna share a screenshot or something. I think.
Screenshot of what?
I'm not sure. I forgot.
No. If I was going to share something about that, right, then it was probably the 50% that of each range, right, there's a 50% turtle soup for continuation. That's a model by itself. So this is the summary. This is the summary of the whole. So if you're going to leak it, leak this, right? And fuck you. There.
I mean, it's more than that, though.
There's always more, and I will probably never be able to give it all to anyone, right?
Of course.
But
the ones that get it, get it.
The ones that get it, decline this shit. So, yes, the ones that get it, but probably no one's gonna get it the way I do. Sadly, turtle soup especially, I highly doubt that that's possible.
That's 4 and 5.
This is the closest, right? This is fucking 9 hours of material. Enjoy.
And why do you say that?
Why do I say what?
That people aren't gonna get close.
No, get close to my understanding of turtle soup.
Yes.
Put in the same hours, maybe you will.
He shared
How long did you?
3, and the 4 and 5 are his.
More than you can imagine, my friend. More than you can imagine, believe me. So,
4 or 5 are noticeable, though.
You're not gonna get them, my friend. Believe me, you won't get it. With a GIF, you wouldn't get it. So,
It's there, though, right?
I mean, you can look for it, but you'll probably not get it. That belongs to me. So.
That's what ICT said.
Yeah, well, that's the truth, isn't it? So, that's all, folks. I hope you found that insightful and useful. You got double what you paid for, right? And 1 hour extra next week. But the important thing to me is not the hours. It's that some of you, not all of you, because most of you are gonna get fucked. I know it. Because 95% of traders lose money. But if some of you turn out to be good turtle supers, especially with this 9 hour content, then that will be enough for me.
Hey, before you go, can you not close the group so we can like chat amongst ourselves?
You cannot chat amongst yourselves. That is forbidden.
Okay.
Yeah, thank you very much for the presentation, Romeo.
Maybe for the FAQs, I'll open a temporary group chat. We'll see. I'll let you guys know, right?
Thank you so much, Romeo. Enjoyed that, man.
I hope you found it insightful. I hope you enjoyed the content, and I hope you put it to work. If you don't put it to work, it's pretty much useless. A waste of your time, your money, and my time and my throat, my voice.
That would be such a disrespect.
I know, right? So you better go into Soup and Turtles right now. Let's see.
Let's make some money.
Turtle soup on Bitcoin right now on a 5-minute chart. I just got in.
Again, study in private. Never study public key. That's the best way to get wrecked. Study in private. When it's ready, show it. And that's all for now, folks. That's a long ass. I hope someone has a recording, by the way. I hope one of you has a recording.
Yes, we have.
Before you go.
We have.
Okay, can you please send me the recording to my DM, right? And I'll give you an extra entry tip. How's that?
Yes, of course. You'll get it.
Yeah, I have it too.
And please let it be an HD recording, all right? Something clear. I will choose the clearest recording, right, and upload it to the group.
Before you go, you are using the CBDR.
Yes. I hope we found it useful, guys. I hope you enjoy the method. Not A to Z, to be honest. That was a misleading title. More like A to X, A to Y. And looking forward to seeing you guys in the future somewhere. Who knows? So take care.
Get on the beach.
Take care.
Thank you so much, Romeo. See you, mate.
Thanks. Bye.
Bye bye. Bye bye.